Good morning. Welcome to the Consumer Financial Protection Bureau's Advisory Committee Roundtable. My name is Zixta Martinez. I serve as the Associate Director for the External Affairs Division at the CFPB. Today's meeting is being held at the Bureau's headquarters in Washington, D.C., and is being live streamed at consumerfinance.gov. A recording of the meeting will be made available on the Bureau's website. You can also follow the Bureau on social media via Facebook and Twitter. In a few moments, I'll turn to Andrew Duke, who will kick off the meeting and introduce Director Kraninger. But first, I'd like to welcome our advisory committee members and introduce the individuals who are serving on the Bureau's Consumer Advisory Board, or CAB, the Community Bank Advisory Council, or CBAC, the Credit Union Advisory Council, or CUAC, during the fiscal year 2020 cycle. Members, when I call your name, please raise your hand. On our Consumer Advisory Board, the CAB chair is Brett Neiser. He is the Senior Director of Strategic Programs and Alliances at the National Endowment for Financial Education in Denver, Colorado. Nikitra Bailey is Executive Vice President with the Center for Responsible Lending in Durham, North Carolina. Sami Alamaway is Chief Executive Officer for Scratch Services in San Francisco, California. Manning Field is Chief Operating Officer for Acorns in Irvine, California. Clinton Gwen is President and CEO of Pathway Lending in Nashville, Tennessee. Dr. Ronald Johnson is the former president of Clark Atlanta University in Atlanta, Georgia. Eric Kaplan is director of the Milken Institute Center for Financial Markets Housing Finance Program in Washington, D.C. Tim Lampkin is co-founder and CEO of Higher Purpose in Clarksdale, Mississippi. Rebecca Steele is Chief Executive Officer for the National Foundation for Credit Counseling in Washington, D.C. Tim Welsh is Vice Chairman of Consumer and Business Banking at U.S. Bank in Minneapolis, Minnesota. On our Community Bank Advisory Council, the CBAC Chair is Aubrey Hulides. She is Senior Vice President and Chief Retail Banking Officer for the Farmers National Bank of Emlenton in Emlenton, Pennsylvania. Eric Began is founder, CEO, and president of Austin Capital Bank in Austin, Texas. Maureen Bush is Vice President of Compliance and CRA Officer for the Bank of Tampa in Tampa, Florida. Patrick Irvin is Executive Vice President of Independent Bank Corporation in Troy, Michigan. Shane Haynes is President and CEO of Heartland Tri-State Bank in Elkhart, Kansas. Bruce Acco is Senior Vice President and Director of Mortgage and Consumer Lending for Bangor Savings Bank in Bangor, Maine. Heidi Sexton is Executive Vice President and Chief Compliance and Risk Officer for Sound Community Bank in Seattle, Washington. Valerie Quiet is Senior Vice President, Chief Legal Officer, and Corporate Secretary for M&F Bancorp in Durham, North Carolina. On our Credit Union Advisory Council, the CUAC Chair is Sean Cahill. He is President and CEO of True Sky Credit Union in Oklahoma City, Oklahoma. Arlene Babwa is Vice President of Risk Management at Coastal Federal Credit Union in Raleigh, North Carolina. Teresa Campbell is President and CEO of San Diego County Credit Union in San Diego, California. Rick Durante is Vice President and Director of Corporate Social Responsibility and Government Affairs for Franklin Mint Federal Credit Union in Chadds Ford, Pennsylvania. Doe Gregerson is Vice President and General Counsel of Landmark Credit Union in New Berlin, Wisconsin. Brian Holtz is General Counsel for Elevations Credit Union in Boulder, Colorado. Rick Schmidt is President and CEO of West Star Credit Union in Las Vegas, Nevada. And Ricardo McLaughlin is Vice President of Mortgage Originations and Operations at Twin Star Credit Union in Lacey, Washington. We also have with us Brian Johnson, Deputy Director for the Bureau, and Matt Cameron, Staff Director for the Office of Advisory Board and Councils. I'm now pleased to introduce Andrew Duke. He serves as the Policy Associate Director for External Affairs and brings 27 years of experience in public policy, including 20 years on Capitol Hill, serving with 3 different members of Congress. He received his BA in Economics from Hampden-Sydney College in Virginia. Andrew?
Thank you, Zixta. Good morning, and my name again is Andrew Duke. I am the Policy Associate Director for the Division of External Affairs, as well as the Division of Consumer Education and Engagement here at the Consumer Financial Protection Bureau. I'd like to thank all of our advisory committee members for agreeing to serve in this capacity to help advise the leadership of the CFPB and its director on a broad range of consumer financial issues and emerging market trends. For those live streaming, let me share a brief overview of our schedule today. Following the director's remarks, CAB Chair Brent Neiser will conduct the meeting. Chair Neiser will introduce Bureau subject matter experts for a discussion on the Bureau's Start Small, Save Up initiative. After that discussion, Chair Neiser will then introduce Bureau subject matter experts for a discussion about the Bureau's innovation policies. At approximately 12:15 p.m., the advisory committees will break for lunch. At 2:15 p.m., the advisory committees will reconvene. Chair Neiser will introduce Bureau subject matter experts for a discussion about enhancements to the Consumer Complaint Database. Then at 3:15 p.m., the Advisory Committee Roundtable will adjourn. As background, the CFPB established its advisory committees to provide substantive information, analysis, operational expertise, knowledge of their communities, and feedback to inform the Bureau's work. As a reminder, the views of the advisory committee members are their views. They are greatly appreciated and welcome, yet they do not necessarily represent the views of the Bureau. I'm now pleased to introduce Director Kathy Kraniger. Director Kraniger became the second confirmed director of the Consumer Financial Protection Bureau in December 2018. From her early days as a Peace Corps volunteer to her role establishing the Department of Homeland Security, to her policy work at the Office of Management and Budget, now to the CFPB, Director Kraniger has dedicated her career to public service. It is my privilege to welcome her to today's roundtable meeting. Director Kraniger, the floor is yours.
Thank you, Andrew. Good morning, everyone. Thank you so much for joining us today. I'd like to also extend my appreciation and thanks to CAB member Dr. Ronald Johnson, CBAC member Maureen Bush, and CUAC member Rick Schmidt for serving as chairs of their respective advisory committees for the past year. I appreciate your dedication and commitment in steering these groups, and I look forward to future collaborations and your continued engagement in this process. I'd like to in particular welcome the new chairs steering these advisory committees, CAB member Brent Neiser, CBAC member Aubrey Hewlings, and CUAC member Sean Cahill. I am confident these committees are in good hands under your new leadership, and I look forward to working with you further. This is also the first meeting for a number of you. Welcome to the Bureau. I am grateful that you accepted these appointments. Thank you for your patience in the application process and selection process. I am certain that both the Bureau and all of you will benefit from your membership. As members of our advisory committees, you help us protect consumers in the financial marketplace and contribute greatly toward helping us prevent harm. I'm glad that all of you have volunteered your time to share your thoughts and perspectives. Our agenda today, as Andrew outlined, focuses on 3 important work streams that we have right now. And let me briefly touch on each of them. Last month, I announced that the Bureau will continue the publication of the Consumer Complaint Database. To date, the Bureau has handled more than 2 million complaints, and more than 5,000 financial companies have responded through this process, providing timely responses 97% of the time. We also announced that we would make several enhancements to the database and the information available to users of the database. The enhancements include modified disclaimers to provide better context to the published data, integrating financial information and resources into the complaint process to help address questions and better inform consumers in the complaint process, and encouraging consumers to contact their financial company to get answers to their specific questions. Additionally, the Bureau will work to provide enhanced features for the database that include dynamic visualization tools on recent aggregate complaint data. We believe the continued publication of the database, along with these enhancements, is a key function of the Bureau that supports our ability to improve and focus our education, regulatory, supervision, and enforcement tools. Also on your agenda for today is our innovation policies. The Bureau has been updating our innovation policies and engaging with a variety of stakeholders, as well as collaborating with other federal, state, and global regulators. As our returning advisory committee members know, the committee spent a significant amount of time focused on issues in financial innovation, and I am grateful for the insight and feedback that all of you have shared with us. Innovation can increase competition and generate better and less expensive products and services for consumers. New products and services can expand access, especially to unbanked and underbanked households, giving more consumers access to the benefits of the financial system. And working efficiently and well in this space means reducing regulatory uncertainty by, among other things, identifying and addressing outdated, unnecessary, or unduly burdensome regulations that impede the development of new financial products and services and drive increasing costs to consumers. Innovations that reduce the costs of providing financial products and services can also reduce consumer prices, especially in a market where innovation supports vigorous competition. And innovation can vastly improve the functionality of existing products and services. To note one example, the development of online and mobile banking means that consumers can manage their financial lives any time of the day from anywhere. We cannot predict the particular innovations that will develop in the coming years, but by engaging, we can ensure that consumer protection includes facilitating access to a vibrant, competitive consumer financial market. Recently, we announced 3 newer revised policies to improve how the Bureau exercises its authority to facilitate innovation and reduce regulatory uncertainty. First is our Compliance Assistance Sandbox, or CAS policy. This sandbox is an environment where innovators, whether it's startups or established companies, can develop new technologies to address consumer needs. In this sandbox, the Bureau will work with companies that are testing new financial products and services while sharing data with the Bureau. The second policy that we announced is a revised trial disclosure program, or the TDP policy, because everything does have to have an acronym. Where covered persons seeking to improve consumer disclosure may test alternative disclosures for a limited time with Bureau permission. This new policy streamlines the review process and provides for time-limited extension for successful disclosure tests. The TDP policy can help provide the Bureau with insight into the effectiveness of different disclosures, and we will use the information gained to pursue potential improvements to our rules. The third policy we announced was the revised No Action Letter policy, or NAL. The NAL policy provides regulatory certainty through the issuance of a Bureau statement that under certain facts and circumstances, we won't bring a supervisory or enforcement action under described statutes and rules. The Bureau also announced its first No Action Letter under the new policy. The Department of Housing and Urban Development received the No Action Letter on behalf of more than 1,600 HUD-certified housing counseling agencies that serve more than 1 million households annually. It is designed to help keep funding streams open for our nation's housing counselors who have assisted millions of Americans attain the dream of owning a home. And lastly, but certainly not least, as this is near and dear to my heart, I want to talk about our Start Small, Save Up initiative. I was pleased that through your chairs, the committees have agreed to provide added focus on this initiative throughout the year to help ensure the Bureau is making steady and meaningful progress towards moving the savings needle. Today's consumers need these skills more than ever. For example, fewer than half of Americans set aside money for their children's college education. More and more people reach retirement with income and savings that simply won't meet their needs. Perhaps most distressing to me was the Federal Reserve report that found 12% of Americans said they could not cover a $400 emergency expense at all, and 27% said they would cover it by selling something or borrowing money. As we collectively support Americans building financial well-being, tackling emergency savings is a logical place to start. And it is a key element as people address the broader issues in their financial lives around attaining and retaining good credit, managing their debt, and maintaining a healthy habit of savings. The goal of Start Small, Save Up is to move the needle on the number of Americans in this country who can cover a financial shock, like a $400 emergency. I'm committed to bringing together partners from across sectors to develop and execute a strategy to achieve this outcome. The collective investment in financial education in this country is substantial, and I believe we can increase the level of emergency savings by bringing these efforts together. So again, thank you all for being here. Thank you for serving on our advisory committees. I'm looking forward to your feedback on all of these issues, and I have no doubt that you will provide productive ideas and criticism. On the issues you're discussing here and across the full range of the Bureau's mission, your input can make a difference in how we do our work and how to make it work better for this country's consumers. Thank you very much.
Thank you, Director Kraninger. Good afternoon, everyone, and welcome to the live stream audience in the United States and around the world. We're coming to you live from the CFPB at the corner of 17th and G in Washington, D.C. I'm chair of the Consumer Advisory Board this year, fiscal year 2020, and with me are members of the Community Bank Advisory Board, other Consumer Advisory Board members, and the Credit Union Advisory Council. I'll be your moderator and host today. Thank Director Kraninger again for her support of this process, even the way the room is set up and the interaction we have with these three advisory groups coming together, and introducing a succession plan for the continued service of advisory members, practitioners and advisors. I want to give you some opening remarks to kind of set the tone for the year in the advisory space, and then we'll start with our first session. We as combined advisory committee members act as a sounding board, listening post, and consumer community business radar for the Bureau's leadership and divisions. Everyone in life has roles to play, both professionally and personally. On Wednesday and Thursday last week, Congress exercised its oversight role of the Bureau. Today, we have the privilege to exercise our advisory role. The field of responsibility is consumer finance, and the core Bureau functions are education, supervision, regulation, and enforcement. In that subject matter field of consumer finance are the lives of the American public, of all ages, exercising consumer choice for the hopes and dreams of their goals, their money, their needs and desires, interacting with enterprises providing financial services and products. As advisors, we can help the CFPB protect, educate, enforce, and set rules to discourage and eliminate bad actors while letting the good actors, best practices, competition, innovation for ideas, technology, systems, and disclosure grow. Thanks to the CFPB leadership and staff for the beauty again of this advisory meeting design, human-centered design, and the ability for us to interact in cross currents of thought and through our different diverse backgrounds. We interact through listening, thinking, and deliberating, and yes, even in Washington, slowing down, and looking for alignment and consensus, all from our professional and community roles as advisors, bankers, and credit union professionals. You have my commitment to honor this process and the roles we are playing together and indeed today. So our first group area setup is on the Smart Small Save Up Initiative, and we'll begin our first session related to this. I'd like to introduce some of our special guests who are subject matter experts. Desmond Brown, Deputy Associate Director, LaShawn Warham, Campaign Manager, and Farah Ahmad, Campaign Coordinator, all from the Division of Consumer Education and Engagement. And before we turn it over to them, this is a recurring theme, the savings initiative, as the directors outlined, through fiscal year 2020. We will tackle this in March and June and throughout our interim activities through this. A key thing to keep in mind, in addition to the questions that are presented in your packet, how does the Bureau leverage its role in an environment where numerous players are active in this area, they've shown interest, and there are all kinds of new ideas and new technologies. So with that as a basis, helping the Bureau achieve and do its best to tackle this challenging problem, we'll turn it over to our professionals from the Bureau on Start Small, Save Up.
Thank you, Brent, and thank you everyone for joining us. It's definitely our pleasure to be here with you today to discuss this important topic. The director mentioned the staggering statistic that almost 40% of Americans would have to borrow money, sell something, or go without to cover a $400 emergency expense. People generally do not anticipate medical expenses, natural disasters, or an expensive car or home repair. But these things can happen at any time. Having an emergency fund in place allows people to be better prepared when expenses occur, and eventually the hope is that they will be able to save enough to eventually realize their long-term financial goals, such as saving for a house, funding an education, or retiring. One of the CFPB's primary functions is to develop and implement initiatives to educate and empower consumers to make better informed financial decisions. Financial education is central to this mission. To that end, we've done a lot of work to understand how to improve a person's financial well-being. The research identified that the important link between savings and financial well-being. A person without is not able to have control over their day-to-day or monthly finances. They're not able to deal with a financial shock, meet their financial goals, or have the financial freedom to make choices that allow them to enjoy life. If they don't have savings, even small amounts of liquid or emergency savings correspond to big differences in a consumer's financial well-being. The vision of the Start Small, Save Up initiative is to increase people's opportunities to save and empower them to achieve their savings goals as a step toward improved financial well-being. The Bureau is committed to using its resources and leveraging partners across all sectors to achieve this outcome. Since announcing the Start Small, Save Up initiative earlier this year, the Bureau has conducted 4 roundtables to understand critical aspects of savings. In March, we had a roundtable in Washington, D.C., which focused on learning from recognized experts and leaders in the savings field. In May, in Austin, Texas, there was a discussion of advancement of savings through technological innovations and partnerships with financial institutions and community groups. In June, we went to St. Louis, Missouri to find solutions to eliminating consumers' barriers to savings with leaders in the field of personal savings. And finally, in August, there was a roundtable in Bristol, Tennessee, where we wanted to understand the unique challenges of savings in a small and rural community. In July, there was also a group of faith leaders that gathered to share their feedback and concerns on what's happening within their communities. In addition, in August, the Bureau launched 2 vital resources geared at helping consumers build their savings. We launched our Building Your Savings, Start with Small Goals, a booklet, which is seen here, and you all can also get outside if you have not perused it, and also the Savings Bootcamp. We'll be discussing those in more detail a little bit later. But at a high level, we do want to share some of the thinking behind the booklet and what's happened with the Savings Bootcamp. The booklet is the fourth and the newest edition in the Your Money, Your Goals suite of financial empowerment tools. The booklet was created to help develop strategies to build savings. Among the tools that we've included in the booklet are ones that help people better manage their cash flow, figure out ways to bring more income by using their skills and abilities, and also ways to increase savings by taking advantage of key moments such as when people receive their tax refund. The booklet is designed to be used in conjunction with one-on-one financial counseling or coaching received through a case manager or other service providers, but it can also be used by individuals on their own. In addition to the savings booklet, we've also launched the CFPB Savings Bootcamp. This multi-week email course provides subscribers with step-by-step worksheets and tools designed to make savings goals and strategies clear, simple, and attainable. I encourage you to find more about these resources at our Start Small, Save Up website at consumerfinance.gov/save. The Start Small, Save Up initiative was also featured online and in several news outlets. The director encouraged people to do three things. One, choose a goal that's actually right for them. Saving can come in any amount. It can vary from $5 to $10 per week or per month, anything that gets them closer to saving and achieving their goal. The second step was to assess trends to see if there are any patterns that emerge. There might be places that people can cut to increase income to make their savings goal more attainable. And the third was to create a rule. Everyone's situation is different, so it is important that it be realistic and actionable so that they are able to achieve their goals. Partners across all sectors have been and will continue to be imperative as we try to understand and move the needle. This September, the Consumer Financial Protection Bureau joined with FEMA for National Preparedness Month. During this time, we highlighted the importance of emergency savings and financial preparedness before, during, and after a disaster. The Savings Booklet was launched in August, again, as the fourth in the Your Money, Your Goals suite of empowerment tools. It's modeled after the other booklets, which focuses on debt, allowing people to stop from being behind on bills, as well as credit. As previously mentioned, one of the Bureau's primary functions is to develop and implement initiatives to educate and empower consumers to make better informed decisions. To that end, we create original and innovative tailored educational resources that work for people. In order to deliver this, we follow a 6-step process. One, we must research to understand what is the problem that consumers are facing. What has the research said? Who can help us understand more? And then why should the CFPB actually be the ones who are delivering this resource? The second is to create. We need to understand how people will access and use the information that we're creating, and what are the best ways that people can learn from this information. The third is we distribute. We think about how we are going to share this information, how will people access it, and if there are any barriers in which we need to overcome. The fourth is embedding. How will our resources be integrated into other services? What types of training should we or others that we partner with offer? The fifth is to evaluate. What are the experiences of our resources? Is it changing behavior? And the sixth is to adapt. What can we improve on? Have there been any changes in the marketplace or the law because of what we've done? To give you a little glimpse into the secret sauce of creating educational content and developing this booklet, what we've done is initially there were 12 tools that we started with. We had 12 rough prototypes that we went to the field to begin testing. We went to Seattle and met with 10 frontline caseworkers. They provided feedback on which tools were more relevant or less relevant, and what particular features would be useful when they were engaging with their clients. Based on the feedback that was obtained during the visit, we were able to eliminate a few tools and modify several others. With the modifications from Seattle, we then went to Louisville, Kentucky, and met with frontline caseworkers there. We went through the same process and got even more granular feedback. a few tools were significantly modified and ultimately came up with a set of 8 tools that was then rigorously tested. There were some tools that were removed because they were focused on long-term savings goals, such as saving for a child's education or saving for retirement. And 99% of the caseworkers said that the people that they were working with were really focusing on immediate concerns, such as how could they pay their rent, how could they build a short-term savings, and they wanted to feel productive and able to celebrate their small successes. So that's how we got to the 8 set of tools and resources that are in this booklet. After we consolidated all of the feedback, we developed draft booklets and dropped them off in 2 communities. One was Chicago, which was part of the original Your Money, Your Goals cohort, and also Huntington, West Virginia. We wanted urban and rural communities to have a diversity in perspective, and we also wanted to make sure that we had diversity in the clients that they serve. We did a training for the frontline caseworkers in each community. 6 were in Chicago and 8 were in Huntington. And then 30 days later, we went back and debriefed with all the coworkers. We spent 1 day in each location and made modifications based on their feedback. So as you can see from this slide, this is more of a step-by-step iteration on what we did to develop the final tool. And the feedback has been that the Bureau and the caseworkers were pleased with it. We'd love to hear your feedback as you review it as well. The next was the Savings Bootcamp. The Bootcamp is a 6-step email course that provides people with the foundation that they need to start saving, 1 step at a time. Each email contains a worksheet or resource that help them think about their money and how to save. After the email is sent, a person will have a few days to focus on just that step. The 6 steps that we want people to focus on are creating savings goals, developing a savings action plan, getting a handle on their money, making savings automatic, putting savings actions into work, and planning for their future. This is a screenshot of the welcome email. As you can see, it contains bright graphics that a person can expect during the boot camp. Each of the 6 emails that are sent have a clear call to action. It explicitly states what the person should focus on after reading the email. Some of the example call to actions are to write down their savings goal or choose a savings goal to put into action or make their savings automatic. The Savings Bootcamp is primarily based on the savings booklet. One of the major differences is when designing the bootcamp, the intended audience were directly to consumers, and consumers could use that source independently. The booklets, however, are simple and easy to use, but they were designed to be used with a practitioner when they are working with a consumer. The bootcamp, as you can also imagine, is electronic, so it's easier to scale, and anyone, including you, can go online and sign up at consumerfinance.gov/save. Finally, we've shared a lot of what we've done in the past. Now we want to share a little bit about what the future holds for Start Small, Save Up. Tools and resources are great, but we do recognize that they're not enough. Collectively, we must do more to help people become financially resilient and deal with emergencies when they arise. The Bureau is uniquely positioned to help. In addition to leveraging existing resources, the Bureau has strong connections to 1, providers of financial services, 2, consumers who have a desire to save, and 3, practitioners or researchers who can help to identify best practices for helping consumers. Today and moving forward, the Bureau is using its resources to increase people's opportunities to save and empower them to achieve their savings goal as a step toward financial well-being. We'll do this by focusing on 3 change levers: employers, partnerships, and communities. To begin with employers, we know that employers play a key role in making savings for their employees. We know that employers can play a key role making savings easier for their employees by prioritizing emergency savings and implementing or enhancing automated solutions. According to an AARP Policy Institute 2008 survey, more than 70% of employees between the age of 25 and 64 who are paid via direct deposit said they would be very or somewhat likely to participate in a payroll deduction if their employer offered one. Assuming money is available, one of the most easiest ways to save is automatically. Saving automatically relieves the burden of having to remember to deposit or transfer money into a savings account each week, month, or when a paycheck comes in. The second change lever is partnerships. The Bureau recognizes that we cannot move the needle on this problem alone. Partnerships will be critical to our success. Partnering with employers is definitely one step, but we also need to partner with financial institutions, fintech companies, nonprofits, as well as other government entities, including other federal regulators. Many companies and organizations already have the infrastructure in place and are able to reach a far greater number of people than we can do alone. We will work with partners to highlight emergency savings products at work and make more accessible products available. By bringing our efforts together, we can increase the level of savings and ultimately financial well-being to people all across the country. The third change lever is communities. Communities will be our laboratory. It will be the place that we can go out and really understand and test what works. We can partner with trusted community organizations to offer saving solutions to tailor to unique audiences. We will do this by embedding and expanding accessible emergency savings solutions within communities such as churches, social service providers, local government, employers, etc. All of this work will be undergirded by two supporting levers. The first being research and evaluation. We've built a robust research and evaluation component into the initiative to ensure we are learning about the impact of our own effort, as well as the efforts of others in this space who are working towards a similar goal in helping consumers save. And the final lever is outreach and engagement. We will continue to advance the Start Small, Save Up message in the national and local dialogue, both directly to consumers and through our partners. We look forward to hearing your feedback today and throughout this process. Together, we hope we can help more people put money aside, even if it's starting with a small amount, and saving up to a place that they can withstand an emergency and achieve their longer-term financial dreams. With that, Brent, we can turn it back over to you.
Thank you for teeing that up. We have time till 11:15 Eastern for questions and dialogue, and Manning will lead off and throw up your card also.
So it's probably not a surprise that I would like to start. But Director Kroeninger, thank you very much for your leadership on this important topic. I think this is one of the most critical issues our country faces today, and a lot of the things that the Bureau actually oversees are a result of this not actually being in place for everyday Americans. And so thank you, LaShawn and team, for all of your passion on this topic and all the progress that you've made. I'll start a little bit about Acorns, not because this is an advertisement, but this is a space that we are in. Our company is a fintech startup. We are 350 people that spend every day thinking about this. We've helped over 6 million Americans start this journey on saving and investing. And I think some of the lessons that we've learned are, number one, it's not necessarily the financial instrument that is actually what's most important. It's actually the emotional progress that a consumer can make, and actually feeling that there is the chance to save even something very, very small. So I think to hear the feedback from the field that the longer term tools weren't that valuable is actually very consistent with our experience as well. And so the things that I think it's also important that the Bureau is focusing on this topic is not one agency or one financial institution can solve this problem. It actually requires the collective effort of us all to actually make meaningful progress against this important issue. So when I think about how to actually drive and move the needle, not only does it take all of the communities to kind of collaborate, but it also requires how do you solve the kind of action gap that most consumers face. And so when you think about a company, and this is what we do every day, is number one, how do you scale? How do you convert? and how do you retain? And those three things have to work together to actually help someone meaningfully make progress. The way in which we do it at Acorns is we literally start with spare change. And just that act of putting something away that you didn't think you could ever do, it builds confidence, and over time that adds up, and actually spare change can add up to something quite meaningful for everyday consumers. And so the action, though, in that first step needs to be really small. Our product strategy is to make big decisions small. And so when I think about the tools that you have in place and some suggestions that I would make, the conversion is really, really important. So how do you take the boot camp? How do you take the booklet? How do you take those counseling sessions into someone actually opening an account, making that first deposit, and more importantly, making that second, third, and fourth deposit? And so one of the things, to link back to a conversation we had yesterday around tech sprints, is a suggestion I would make on one of your future tech sprints is to turn this content into something that enables all of the institutions actually to turn that into setting up an account and setting up a deposit. Because one of the challenges that, for example, a booklet has is it's hard to turn that into consumer action. I think if you look at where mobile adoption's gone, where fintech is, and what's successful is people are able to, in a very simple way, turn the inspiration of, I need to do something, into an action that happens in minutes. And so kind of the agenda for that tech sprint might be to take this wonderful content, because it's all exactly right, and actually make it into something that is mobile friendly, that is API driven, and allows all institutions to ingest that and lets them apply it to their financial instruments, leverage their messaging, and let the marketplace drive and optimize on messaging. And that would be feedback that the team could capture and that you could share with the broader community. So thank you very much.
And feel free to respond if, and Manning, pop your name tag down so when you finish up. So think of who wants to.
I think
Yes,
that's
yes.
absolutely critical feedback, and we are embedding that exact thing into what we are doing. We do need to make sure that we know that the booklets definitely are not enough, and we know that we cannot do it alone. And a lot of people now are going mobile, and so we have to make sure that we are evolving with the times if we're actually going to be moving the needle.
Desmond? Yeah, okay.
Something I didn't hear about in the community outreach, and it might be just in there, but you haven't talked about it. Starting small, I agree with that, but I think it's even, and we're looking at the problem now as it exists, people not saving enough, but I think it's created early on, the habit of savings. And part of the community outreach I'm thinking about would be even earlier in high school, perhaps middle school, of just creating the action of the habit of savings. I was lucky enough when I was growing up, my dad actually had a passion about putting something away. So when I got allowance, he always said it was never too small, just start putting something away, and until I had my first job. So to the point where if I don't put something away, I actually felt guilty about it. We all have these examples of people who, it doesn't matter how much they earn, they don't save. They still live paycheck to paycheck. So I wondered if you might talk about some initiatives you have that could approach it from an even younger age to create those habits.
Thanks for that question. So we are leading today with the Start Small, Save Up initiative because it's a critical priority for the division and for the agency at this moment in time. But the Bureau and Consumer Education Engagement Division overall, we do a number of other activities geared at going into the household to provide parents with resources and tools to help educate their children from an early point on. These resources are part of our normal education suite. We're also working right now to provide resources to teachers so that they can have information in their classroom so that as they engage with their students, they have tools that they can engage students with that are appropriate. They use games and other types of resources like that. So while we're talking about Start Small, Save Up today, there's a whole host of other strategies that we're implementing to reach people where they are, really focusing on information that's timely, information that can motivate people, and information that's relevant based on the context of the person. We think that parents play an important role in providing type of guidance that your parents did and others are doing. And so we want to give them the resources in their households to be able to engage with their children. Similarly, teachers are an important part of this conversation. The classroom is an important part of this conversation. So we have resources to help them do that as well.
Okay, thank you.
Arlene, thanks for that question. Sean?
So I want to tie on a little bit to what Manning said, is that education is fantastic and the initiative is wonderful, but how do we turn that into action? And I think you do that through different types of products. So I think if you'd ask any American if they want to save, they would say yes. And so how do we give them some avenue to be able to do that? One of the ways that I've done it at my former credit union we're putting into place now is through what we call a borrow and save loan. And so this is a product that was developed by the Filene Foundation and the Ford Foundation. And we know there's that 40% number that you mentioned that couldn't take care of a $400 emergency. So where do Americans turn when they need that? And typically it's payday lending. So how do we provide some alternative to that that's not going to put them in some kind of a predatory debt trap while providing that literacy and providing that education and starting those savings behaviors? And one of the ways we do that is through that borrow and save loan. Basically, it's a lower interest loan to be able to help emergencies that come up, because we do know that unfortunately bad things happen to good people. And so a portion of that, 25% of that, is put into a savings account at the time of loan. And there's counseling, there's literacy that goes along with that, budgeting tools. The other thing we know about payday lending is that it is a repetitive behavior, sometimes done dozens of times, that you can't get out of that cycle. What we've seen with the borrow and save loan is that 2.7 times on average, then you've established your savings account, you've understood the behaviors, and you don't need to go back to doing a loan when an emergency strikes. So how can we continue to look for products? How can we look for partnerships to be able to drive that engagement? Because it's far more than just education we have to provide. We have to provide that path to the savings behavior.
So I really love that example because it does a number of things that we are really strong proponents of, right? It hits the issue of building credit, because the person who's paying back their loan is also getting reported to the credit bureau, hopefully in your product's case. It gets the person in a habit of putting money away to not only pay for a commitment, but essentially the habit of saving. And it also gives a person the opportunity to borrow from their own cash reserves when an emergency pops up. So it covers the gamut of things. And one of the things that I just want to also touch upon about this Start Small, Save Up initiative is that we're having a really strong component around research, looking at what some of the innovations that are taking place in this space are, promoting those things that are working, making sure that we can try and get those things to scale. You know, your product that you're talking about it's kind of like the credit builder loan products that a lot of people talk about, but we haven't seen that at scale yet. And so how can we at the Bureau help to elevate these types of products that are hitting so many different points that we support and want to see to get to scale so that more people can get advantage of it? We have the unique ability to convene, groups like this, but also convene financial services providers and others in the space to help kind of elevate and promote the products that are working, because we think that's a really important part of this, is to give people access to things that will actually help them and hopefully do many things at the same time. So thank you for bringing that example up. I think that's a great example of things that we want to see more of, those types of products that can do several things at once. Sorry.
Thank you, Sean. I've got 3 people in the line. Before I just want to mention, think about this question. How does the Bureau leverage its position to be most effective in this space? We'll go for Aubrey, Eric, and then Nikitra.
Yes, I'm curious to hear from the Bureau how we as advisory groups can help with the outreach. thinking through this, we take it back maybe to our state associations, going into schools and that type of thing. But are there any other avenues that we could help with?
I think some of the ways that we would enjoy partnering with you is, one, to highlight areas of concern that you are seeing so that, sometimes people think that we've thought of everything, and while we've thought of a lot, we can't think of everything, and we hope and rely on you to help bring some of those concerns to us. You all also have a network of organizations that you partner with on a regular basis, and so you are able to help push the word out. We can only do so much, and we can only penetrate to a certain level, but if collectively we are all pushing out the same message, then I think that will be helpful.
Great, we'll go to Eric.
Thank you. I think I'd like to put it out there that this initiative, I think it's incredibly important. We see it not just in terms of saving for a rainy day, for an emergency, but also in the larger question of retirement planning, down payment. And I think that this initiative can be tied into so many other initiatives or issues in front of the Bureau, especially around lending, what people can afford, how they can afford loans. And I think of this from a standpoint of when you're thinking about the ability to put money away or to afford a loan, you have a finite number of dollars that come in, and you have costs that go out, the fixed overhead, right, the things you have to pay. Then there's malleable expenses, there's discretionary expenses. Among them would be savings. And this initiative to try and turn what is otherwise discretionary into something that's more forced, I think tying that to getting a handle on money, one of the steps that you mentioned, again, I think that can go a long way towards consumer health and welfare overall. And I think working with consumers to understand, and I think it's a great idea to start from a young age, that the choices that you have within the range of dollars that you have, the amount of dollars that you have, in order to understand what you have available, whether you'll have enough available to pay expenses as they come due, whether they're on a monthly basis or an annual basis. All of this can be tied into so much more that the Bureau is doing, and I think it's a great opportunity to positively impact consumer health and welfare. And to further the mission of the Bureau as well. So I think there's a lot of opportunities to take advantage of that holistically across the Bureau's business.
Great, thank you, Nikitra, and we got some great signs up, so get them in order. Rebecca's next after Nikitra.
Thank you so much for this important initiative. It's really awesome to see you all thinking about ways to really help empower consumers to really be in a position where they can create the type of resiliency to handle financial emergencies. We know from our nation's history of redlining that some communities are bombarded with more fringe financial service providers. And typically those financial service providers, like was mentioned earlier, payday lenders, have products and services along with car title lenders that cost consumers more for basic financial services. And we know that those practices together cost consumers about $8 billion a year. So it's encouraging to hear you say that you want to figure out a way to really help guide consumers to really learn about the products that Sean just spoke about, those products that have savings components. And in North Carolina, there's also another credit union that actually has a product designed like that. Is it possible to create consumer education materials that really instruct consumers on the cost of products and to really help them understand that products from the fringe service action of the marketplace may have additional costs than products from more mainstream and traditional financial service providers like banks and credit unions?
Thank you for that question. I think when you look at our resources, and I will go back to the Your Money, Your Goals suite of tools that we have. One of the things that we encourage consumers to do is really shop for services. When you look at all of the different resources that we put out at the Bureau, it's mostly around helping consumers to think about what their options are, what are they trying to do, and then analyze and make a decision based on the cost. If they have the information in front of them that this product is going to cost X dollars, this product is going to cost X dollars, sometimes they will make a decision based on what they're trying to do in that time. And we're really just trying to focus on giving people all the information that we have available to us that they can use in their decision-making process. And that's kind of how we see the work that we do, make sure that they are informed. Sometimes what might not seem rational to one person is completely rational to another person in terms of their decision-making. So the best that we can do is to give people the maximum amount of information so that they can make the best decisions. Different products, even within checking accounts, for example, if you want to look at another line of products, some are cheaper than others, right? And you can walk down the street and see different institutions that look the same way. But as you unpack what you're trying to do and look at the products, we hope that through our information you'll be able to make the right decision based on what your needs are. And that's kind of just the way we normally think of our financial education content.
Great. Next is Rebecca, then Ron, and then I have 5 other people lined up after that. And I'm going to inject a comment too, but go ahead,
I just want
Rebecca,
to thank
after
the
Ron.
Bureau for the work related to savings, because in my space, the credit counseling space, where we have thousands of counselors who are educating consumers who are either highly in debt or have no savings or struggle day to day, it's really hard to be poor. And one of the things that I want to mention is that when someone's in crisis, the mindset, and I think it was mentioned earlier, is one of the most critical pieces. Believing that they can save is the first step. And what we do every day is really counsel people on how to believe that they can do that. So with that, I think tools related to that and training related to that and the approach of how we talk to a consumer in crisis is a very, very important part, not just the nuts and bolts of save a nickel or a dime or a quarter, but it's like how do you get to that point to really make a difference and scale it. A couple things that I would say that we have tested is one is putting a rewards program in, so give them a start. So $200 to start your savings. It's kind of like down payment assistance for housing. Like we should help people start their savings and give them confidence in continuing. The other thing that we're testing is around some technology like Acorns and others is really having more transparency to their budget and having transparency to how much they're accumulating really gives people, more confidence in moving forward. And then the last thing I would say is having each consumer who's in this position talk to one another is another thing that we have tried and tested and I think really works. We've built some portals where customers can get into groups and Facebook groups, et cetera, on their own, but talk about the struggles that they're having because they're saving, but at the same time they're still in debt. So there's some real challenges there. So I just add that to some of the testing that we might consider.
Thank you, Ron, and then I'm going to recognize myself for a 1-minute comment.
Actually, one of the things I'd like to mention is that Manning's company is called Acorns, and I think it's very, very important. This is one of the aspects of the saving discussion that I think needs to be emphasized. It's called Acorns. When I taught personal finance at Texas Southern University, which was required, now it's not, required for juniors, required for graduation, I would begin by saying, what's the difference between saving and investing? And I would say that squirrels save. So his company's not called Squirrels. Okay, it's called Acorns. And one of the things that's really important, as Rebecca mentioned, is that there's a mindset. There's a mindset of dependency. And in order to break that mindset of dependency, it is really important to get people to think about becoming contributors. And that when they actually save, they are in fact investing in their community, they're investing in their future. To Eric's point earlier, that they need to understand not only that they are empowered to do this, but there is this benefit that they get from engaging in this saving action by effectively becoming an investor. And I think that it's something that's very, very important. And so at the phase 2 of this wonderful exercise, you want to really have that level of encouragement for people so that it becomes more, they get more out of it. beside just putting off spending.
Great, thank you. I want to give two brief examples of engagement, and these can be touchstones for us as we think about this. Manning Field has been partnering with the Bureau, utilizing his connections to open doors for them through media connections, influencers, and others. And I believe our director is going to California next week to go to Acorn World Headquarters to see what's going on and to further that engagement. She's also been on CNBC through some of those introductions. And Maureen Bush, through the Bank of Tampa, published a blog about the Savings Initiative. So those are just a couple examples. We have Eric Bagwin next, and then Maureen, Rick, Shane, and Heidi.
Thank you, Brent. Just want to echo what the other members have said here, and kudos to the Bureau for addressing this issue, because this is really a crisis issue for so many families in America. When we're talking about this, we're really talking about facilitating micro savings, start small, right? A challenge for traditional institutions is that the technology does not enable us to facilitate these micro savings on a cost-effective basis. So at Austin Capital Bank, we've actually formed our own financial technology innovation group and built our own platform to actually deliver micro savings in a cost-effective manner for the consumer. So what have we seen success in? What we see success in is making savings automatic, affordable, and out of sight. And we've also found a lot of success in selling a value proposition that is not savings. And so, for instance, in one of our products, a product called Credit Strong, we're actually selling building your credit. And let me give you an example of this, is that earlier this year, we launched what we believe is actually the nation's first subscription-based credit building account. And so a consumer can get started on building their credit and setting aside savings at the same time for as little as $15 a month, right? And so this consumer, through this product, during the life cycle, will be setting aside savings, and maybe they set aside a couple $100, up to $1,000. And so they have that savings component, but the other part of savings is savings on expense. So while they've set aside a couple $100, they might save thousands of dollars on their car loan or tens of thousands of dollars on their home loan, and that can really move the needle. Thanks for the time.
Okay, great. Maureen.
Thank you, Brent. I had a question, and it relates to what Manning was talking about and Ron was talking about the emotional component of it. And the Bureau has fantastic resources, from what's being done in the Start Small, Save Up, what's being done on the education part for practitioners, what Yannicka has talked to us about financial well-being. And my question is have you meshed those together? So for example, I know there's that questionnaire on your financial well-being. Has that been part of this program to do like a pre-assessment and a post-assessment if it's counseling, or as part of that boot camp? Because I think in addition to maybe the success that someone was able to save X amount, but to be able to see where they rated themselves from their financial well-being, from their starting point to where they are 6 weeks later, or however long that counseling session is. It just seems that a great utilization of resources that you already have. And maybe you are merging them together, but I didn't hear that when you were talking about it. But it just seems like you have so many wonderful products that you've already developed, and kind of bringing those together.
Thank you for the shout out on our great products. We really appreciate that. I think that Sean mentioned how part of our work will be looking at communities and trying to use those as testing grounds for a lot of the things that we do. As part of the Start Small, Save Up initiative, we're bringing together many of the different work streams that we've used in the past. So Your Money, Your Goals is a work stream that started before we launched the Start Small, Save Up initiative. The tax time savings work that we've done for several years now is part of the Start Small, Save Up initiative. And in both of those programs, we're really looking at the organizations that we're working with and looking at the consumers or customers that those partners have before they engage with us. For example, in Your Money, Your Goals, we do an assessment of the caseworkers that we're training to see how we are increasing their comfort level and their knowledge about finances, because we know that once they have a level of comfort personally, they will also be much more willing to share information with their clients. Actually, we've been told this is part of our buildup of the product. In our tax time savings work, we have a number of sites that we work with each year, and we know that within those organizations, we're seeing a movement in the number of their clients who are actually depositing a portion of their tax returns into a savings account. So we are doing evaluation in terms of post, before we go into the intervention and after in some of the programs, and we intend to continue that as part of the community's effort within the Start Small Save Up as it expands in the next year or so.
Right, and I was even thinking just for the person who's being counseled or the person who signs up for the boot camp, if they took that survey first to see where they scored, and then they went through the boot camp, and then they took the survey again to see, as I said, the number might say, I saved $100, and they might feel good about it, but just to be able to see kind of that pre and post test on an individual level, that's what I was wondering
There are
about.
plans to build in the financial well-being scale into the work, and then as you know, the financial well-being scale is being utilized not just by the Bureau's projects, but also other external partners, whether it's LESC or other external agencies. So part of our work will be to include the financial well-being scale in our efforts, particularly at the local level as we launch the community's efforts going forward.
We have about 9 minutes left. We have Rick, Shane, Heidi. We want to reserve time for the director and/or other staff members she designates to weigh in. This is so important. So, Rick.
Okay, thank you. Just want to go back, and a few of you have touched upon youth education, youth outreach, and starting at a young age. One of the things that we did at Franklin Mint Federal Credit Union for years, we've provided financial education like many credit unions do. But we saw this need at a younger level to get kids started early and really get their parents thinking about opening savings accounts at an early age for their kids. And, you know, some of us do that automatically when our kids are born. They get their Social Security number. We go in and start that habit of savings for them. But we found that it's not always happening automatically. So one of the things that we actually did was created the Berenstain Bears Financial Literacy Program. We reached out to the creators of the Berenstain Bears, and they have a lot of books that encourage savings and financial literacy. So actually came up with our own book, the Berenstain Bears Visit the Credit Union, and with it's very nice. Of course, our Cubs are having a little issue. They have money. They don't know what to do with it. They don't know how to save it. And of course, in the book, they learn the best way to do that is to use a financial institution and keep their money safe and keep it growing. But beyond that in the book, but we also have lesson plans. There's graphics, all geared towards kids, but also their parents as well. So when we look at the partnership, it's a partnership with the parents. They're starting these accounts for their children, but also in schools, because there's lesson plans that we're going out teaching in schools, or we're having teachers conduct those lesson plans. So we found that to be very successful for us. In fact, we opened this up to other credit unions. So there's about 14 credit unions now using this program. But just making it fun and appealing to these kids has really shown a dramatic difference for us, and for some of those other credit unions too. When we look at those small savings accounts, we also offer a match after they open their what we call Cub account, offer a match to them when they come back for their first deposit and then their birthday month deposit. And most of the credit unions in the program do that, and they're seeing great success in that just because it's more the fun aspect of it and they can relate to these children's characters. So I think when you are looking at the younger group, it's just something to keep in mind. How do you relate to them? Make sure it's relatable to them and to their parents.
Thanks, Rick. We'll go to Shane.
Yes, thank you. And kind of going off of what Rick said, you know, as a member of a smaller institution that doesn't have some of the resources to create our own resources, this is great. And we can take this, instead of going to a high school with a piece of paper that we printed off, this has some graphics. This is engaging to kids. And so when you talk about trying to get this message out and sending one message, there are a lot of small institutions that, like all of us in this room, go to the schools, go to the high school, go to the middle school. This is something that we can all send the same message using a book that's got graphics that engages kids' attention. And kind of going off of what Arlene said, the success of this program, I really think needs to have a long-term approach. Because if we're targeting young kids it's going to be a while before they're going to have a job that's going to allow them to save significantly for that emergency. And so I really think that's where it starts, is with the young kids. I completely agree, and this is a way to send one message. But I hope we have a long-term view of, we're not just looking at the consumers today, but the consumers that are 10 years old, that are going to be, at some point in that same position and needing that same $400. And so I think this is a long-term program that I think is a great program.
Thank you. Heidi, and then the director.
Thank you. I sit on a nonprofit board called Financial Beginnings. I think I've mentioned this in prior years. And I do applaud the committee for their research and the tools that you have started on. I encourage you, along with Manny, to really capitalize on the app functionality and or the, on the device. Out of curiosity, though, on Financial Beginnings, we track our success. We have a K through adulthood curriculum, and we track our success by how many classes and participants that we perform every year. I was just curious, do you have statistics on how many people have gone through the boot camp or how many have downloaded that program?
We launched in August, and since that date, we've had about 1,500 people who've signed up that have gone through the boot camp. And while right now we've not been able to embed the before and after metrics, what we are able to do is allow people to provide their testimonial services and their other comments. And so we've gotten a lot of positive comments both before and after about what they're looking to gain from the program, as well as what they've obtained once they've completed it.
Great. Thank you so much for everyone sharing their thoughts. This may end up sound a little bit like a wrap up, but I'll still let Brent wrap up. But you'll hear, I think, some continued themes here from what many of you have said and things that we're working on and charging the staff to think about. One is just, Rick, to the example of the writers, the Berenstain Bears, and many other partnerships that are out there. As I said before, this is an area where there is substantial investment, and I think there are a lot of people, certainly all of us have experience with money, all of us have experience with financial issues, people who are influential, everyday ordinary people, all of us have stories to share. So how we engage and seek out those who have that willingness and interest. So we're certainly thinking about that in terms of how to harness a lot of influencers out across the country and get that engagement and get that partnership and figure out what the best messages are and the best audiences that they can reach. That piece of partnership is I think, an important area for us to be thinking about. The second is also counting off of that too, something that I learned early on from the staff here and a lot of the nonprofits engaged in this area. Making money fun, making it approachable, making something, these things that are it's doable. It is something that we can all do and understand, and that is, I think, critically important too. It's making it real, and it is real and tangible to be thinking about savings and what the goals can get for you, and feelings. Manning started with feelings. Feelings are part of this. So how we feel about money, I think, is relevant and important to harness and bring into bear. We got two more. One is just data-driven and research. We very much want to hear what the experience is of institutions. Sean mentioned what his institution's offering. There are dozens upon dozens of products and services like that. What is the data that you're all seeing inside your financial institutions, or there are nonprofits actually offering these kinds of products too? We are at a place with the Bureau where we can actually take a lot of the things that are happening in those places and actually aggregate that up and be able to look at trends and best practices and products that are available and experience that's out there. So very much as we talk about our research agenda, and we'll talk more about it with the ARC, but you all may have input or thoughts about that. How do we get this kind of data pulled together in a way that we can see what national trends are and what the experiences are? And then the last thing clearly is digital too. We know we put the booklet together as a booklet. There is a part of the country and a segment of the country, and when you talk about counseling agencies, there is a desire for some paper, and there are people who are going to benefit from being handed this book. But we have the opportunity to think about just in time bites of information, digitizing this content, making it digestible, and just in time. So those are the other things that we are thinking about and looking at as we take this to the next level. So very much appreciate your interest and feedback and continued discussion, as Brent indicated, on this topic.
Thank you, Director. I just want to remind the live stream audience, you're watching a live feed from the Consumer Financial Protection Bureau brought without commercial interruption, but that would be wrong because we want you, intermediaries and concerned consumers and activists in your communities to go to consumerfinance.gov/save to engage with Start Small, Save Up. So we're going to now transition to the next topic here, which is the work on no action letter policy, revised trial disclosure program policy, and the compliance assistant sandbox policy. And we'll have some new staff professionals joining us at the table. Edward Blatnick, Deputy Counsel in the Office of Innovation. Albert Chang, Counsel, Office of Innovation as well. And Brian Johnson Deputy Director made comments earlier, and the Office of Innovation comes under his area within the Office of the Director, and that shows how prominent the thinking and the intention is for this. So also just while we're getting settled on the savings initiative, the chairs will be working with our council and advisory board members throughout the year to keep percolating this savings idea and the notion, and to tap into networks and ideas as we go forward. So we will now have our staff professionals help present the innovation.
Sorry, we're here today to talk about the relatively new Office of Innovation, started in the summer of 2018. And we're still very much a startup within the Bureau. We have our director, Paul Watkins, who unfortunately couldn't be with you today, he's traveling. And me, Deputy Counsel, Albert, a counsel. We have one detailee, one program analyst, and we're in the process of trying to hire another person, which that will happen soon. But we're still very much a startup and growing. Let me start with the statutory basis of the Office of Innovation. It's interestingly in Dodd-Frank Act 1021 A and B, especially in 1021 B5, the word innovation is actually in the statute. And so that really is the foundation for what we're doing, and it talks about facilitating innovation to enhance consumer access to consumer financial products and services. So that's really what we're all about. Everything we're doing is trying to facilitate consumer beneficial innovation to increase access and other benefits to consumers. In terms of how we see our roles and responsibilities, I think one thing we've been focusing on during our first year or so is revising and developing new innovation policies. And there are 3 of those, and I will talk about those in more detail shortly. It's the no action letter policy, the compliance assistant sandbox policy, and the trial disclosure program policy. At a very high level, I think it's helpful to think of these as different tools the Bureau has created to have at its disposal to help with facilitating innovation and assisting companies to comply with our laws and regulations. Obviously, everyone is familiar with regulations and interpretations, the official commentary, et cetera. We have other tools, enforcement, supervision, education, but we're really just adding other ways based on our statutory authority so that the Bureau can be more agile in dealing with the kinds of regulatory uncertainty that are thrown up by the innovation that is taking place in the market today. Because as everyone knows, rulemaking is a great thing, but it takes quite a long time. And if you simply rely on rulemaking to address uncertainty that's coming up through innovation, it's just not going to happen quickly enough. And we believe through these innovation policies, we will be more able to address things in a more timely fashion. In addition, the Office of Innovation, like other offices of innovation that have sprung up at other federal agencies, is part of our role and responsibility is to serve as a central focus or central point, both internally and externally, for the topic of innovation, so that the Bureau is approaching innovation in a consistent manner, and we don't have one part of the Bureau doing this and the one part of the Bureau doing that. So now turning quickly to the innovation policies. The first one is the no action letter policy. And there was a pre-existing no action letter policy that the Bureau put out in 2016. And we did issue one no action letter under that policy, but only one. And so we thought it was important to revise it in certain ways to make it more attractive and ultimately to issue more no action letters and ultimately to facilitate more consumer beneficial innovation. There are a number of changes we made. I think probably the most important ones were that we're shifting from a staff recommendation of no action to a Bureau commitment of no action to give applicants more assurance that the Bureau stands behind the no action position. And another thing that we tried to do is to make the no action letter policy somewhat more like other no action letter policies that are operated by other federal agencies. And those agencies generally do not require data sharing as part of their no action letter programs and generally do not limit the time of a no action letter. It's usually for an indefinite period of time. And so the old no action letter policy had data sharing and a time limitation, so we removed those conditions and we're shifting back more to something that doesn't have those conditions. The second policy is the trial disclosure policy.
And before, because I know you mean this,
Yeah.
but I do want to make sure it's crystal clear. When we're talking about those terms and conditions, we remove them from the policy, and it gets back to the conversation we had before. There's not, we're not setting all of the rules in the policy up front in a way that chills applications. There may be a time limit in a no action letter that we issue. It'll be based on the product. It'll be based on the discussions of the benefits and risks, but it's not a term and condition, precondition up front in the process.
Yeah, and
so,
similar-
and I know you mean that and know that, but I want to make that clear to the public.
Yeah, and thank you, Director. And similarly, there may be a case in which we want to have either the Bureau and or the applicant wants to share data in the context of no action letter. Second policy is the trial disclosure policy. That's based squarely on Dodd-Frank Act Section 1032E. And here again, the Bureau made an initial attempt with the trial disclosure policy. It came out in 2013. Unfortunately, there was not that much interest. And so here again, the Office of Innovation, when it started last summer, decided we need to revamp that policy to make it more attractive and more, user-friendly and more usable. And I think the main thing that we heard from various stakeholders about the old policy was that there was uncertainty what would happen once you were given permission to conduct a trial disclosure program and do in-market testing and get a waiver from the Bureau from not having to comply with current disclosure requirements. Well, what happens if your trial disclosures test very successfully after, say, a 2-year period, what happens then? Because companies would say, well, do we just have to go back to using the old disclosures that we think are not as good as the ones that we developed? And so in revising the trial disclosure policy, we made sure to put in a section that makes clear that if you are in that situation, you have trial disclosures that test successfully, you can apply for an extension, and it's very likely we will grant that extension, and you can continue to use the disclosures that you've developed for at least as long. And we also tried to signal in various ways that we're interested in using that data about the new disclosures to change the disclosure regulations themselves. And finally, there's the Compliance Assistance Sandbox policy, and that's something new that the Office of Innovation developed that did not exist prior to its inception. And it's really based on feedback we received from stakeholders about forms of liability protection that go beyond a no-action letter. A no-action letter, as I think most of you understand, is really just a statement about the Bureau's enforcement and supervisory discretion. It doesn't prevent, certainly, actions from state regulators or private plaintiffs. Clearly, when we give a no-action letter, we're hoping to coordinate with other regulators and hoping that once our no-action letter policy becomes established the way that the SEC's has, those will be given deference. But strictly speaking, it does not provide a safe harbor from liability protection. So what we did with the Compliance Assistance Sandbox policies is we again went back to our statutes, and we found in three of our statutes, TILA, EFTA, and ACOA, there's a provision in each one of them that says if the Bureau issues you an approval for something you're doing, then that will provide you with a safe harbor from liability. It's important to add there that what an approval is really you coming to the Bureau and say, we're doing this, or we want to do this. There's this cloud of regulatory uncertainty about it, so we're hesitant to do it, but the Bureau will say, we're giving you approval, we think that's, in our view, that's compliant. And so because we think it's compliant, we're going to give you the safe harbor. I just also want to emphasize that in all of three of the policies, and especially the case of the no action letter and the trial disclosure policy where we were revising things, at the same time we wanted to maintain strong consumer protections, because there's always a concern that by granting these kinds of compliance assistance that somehow consumer protection will be sacrificed. And I think we've made sure that in various ways, and I think I'm kind of running out of time, and I want to make sure we have enough time for all your input. In various ways, these policies build in a very robust way consumer protection. So it's basically, when you apply under any of the policies, you have to point out potential consumer risks of the product or service. We look at that issue very carefully when we're assessing applications. There's some degree of, we still maintain our normal authorities to supervise and enforce. And in the case of the TDP, the trial disclosure, and the compliance assistance sandbox, there's also you also are required to provide data about impacts on consumers, through which we can see in a very clear way how your product or service is impacting consumers. And then even in the case of the compliance assistance sandbox policy, there's a commitment to make sure that you will compensate consumers in the hopefully unlikely event that there actually is harm. And finally, I'm just going to mention that all of these three policies were issued and announced by the director on September 10th in Atlanta, which is a very important date for the Office of Innovation. And at the same time, the director announced that we had issued a no-action letter to over 1,600 HUD-approved housing counseling agencies. We had been working with HUD from the beginning of 2018 on a no-action letter application where HUD applied on behalf of the housing counseling agencies because there was uncertainty under RESPA Section 8 about arrangements through which mortgage lenders provide funding to housing counseling agencies. All of that is allowed through HUD's requirements, but because of uncertainty about RESPA Section 8, these arrangements just were not happening on a significant basis. And so now we're hoping that with the issuance of that no action letter, that will sort of break the logjam and the money from mortgage lenders will start flowing to support housing counseling, which I think everyone thinks is a very good thing. And with that, I'm going to pass it over to my colleague Albert to talk about our coordination efforts with other regulators.
Thanks. Thanks, Ed. So last but not least, we wanted to discuss our interest in coordinating with other regulators to facilitate consumer beneficial innovation. The Bureau believes that coordinating with our federal and state regulators is a crucial component of facilitating that consumer beneficial innovation, particularly when we have, with those other regulators, overlapping regulations or shared jurisdiction. The policies that Ed summarized reflect that interest, including by allowing applicants under those policies to identify other regulators with which they would like the Bureau to coordinate in reviewing an application. And we have natural counterparts at the other regulators, particularly at the federal level, to coordinate with. Federal regulators that have innovation offices either in place or in development include the CFTC, the FDIC, the OCC, and the SEC. In terms of coordination with states to facilitate that federal and state coordination, in September, the Bureau announced the American Consumer Financial Innovation Network, or ACFIN. The network helps members to accomplish three objectives in the main. The first is to help coordinate to facilitate innovation that benefits consumers and enhances shared objectives such as competition, consumer access, and financial inclusion. The second is to help minimize unnecessary regulatory burdens and bolster regulatory certainty for innovative products and services. And the third is to help all members of the network keep pace with technology in order to ensure that markets are free from fraud, discrimination, and deceptive practices. ACFIN members accomplish these objectives through sharing information on innovation-related matters as appropriate, as well as by participating in joint office hours programs. ACFIN members also have the opportunity, if they so choose, to coordinate on other innovation programs outside of office hours, including through no action letters or sandbox trials. Finally, at the international level, one of the first actions of the Office of Innovation was to join the Global Financial Innovation Network, or GFIN. The goals of GFIN include sharing information and best practices related to innovation, coordinating on RegTech and SupTech issues, and facilitating cross-border trials. I think until a few days ago when the SEC, the CFTC, and I believe the OCC joined GFIN, CFPB was the only U.S. member of GFIN. We are a coordinating group member of that organization, which allows us to participate in setting the overall direction, strategy, and work of GFIN. And our focus to date has been on the regulatory and supervisory technology work stream of that organization. So with that, I'll turn it over to the chair to facilitate the discussion. If you'd like to learn more about the office, there's a link to our landing page on that slide. Feel free to also contact any of us here or our general email box that's also on that slide.
Thank you, Albert and Edward. Get ready to get your cards up. And as you ask a question, think about, we had probably 6 different areas. So if you want to speak to an issue for efficiency, call out one of the, if it's trial disclosure or whatever, or one of the networks or other regulators. And we'll start with Rick over here.
Thank you, Brent. I have 2 questions. The first one, Albert, you were talking about coordination with other regulators, and unfortunately, I don't see our regulator NCUA on that list, so that's a little disappointing to see. Hopefully, they'll be a fast follower. But I guess the question is, as it relates to the no action letter and the trial disclosure program, if those were to be issued to, a financial institution, are those regulators notified? They're clearly not bound by that ruling, so is there any discussion of, from a bank or credit union perspective, what would be the reaction or the issue if you issue a no action letter and then NCUA or FDIC comes along and does an exam and says, no, sorry, that doesn't follow our rules. Then I have a second question, is especially in regards to the trial disclosure program, how do you measure the success of that program to determine, is that disclosure effective, is it successful, is it consumer friendly, and then does the Bureau then implement that on a nationwide basis and say we're adopting that as a option for financial institutions to use in the future?
Great. Yeah, I think those are both 2 very good questions. The first one, I would say, for one thing, all 3 policies build into them the opportunity for you as the applicant to request that we coordinate with other regulators, and that would include those that are your prudential regulators, for instance. And certainly, I think our intent, and we're in the process of doing this, our intention is to make sure that before we issue one of these, that whether you've requested it or not, that we touch base with those regulators to make sure that we're all on the same page. And really, ACFIN is designed in part to make this all much easier. If all federal regulators and all state regulators were part of ACFIN, that would just be the perfect forum for us to discuss that kind of issue. If one regulator is giving some kind of compliance assistance, all the other regulators would know about it. The second question is, in terms of the testing, I think, again, we haven't actually done one of these yet, so it's a little speculative at this point, but I think our expectation is ideally that there would be a kind of A/B testing of the disclosures, so you'd have one population that gets the regular, normal, required disclosures, and another population that gets your trial disclosures, and then you would test through various metrics, focus on consumer understanding, which of those disclosures has the greatest level of consumer understanding. And if the trial disclosures show that consumers are understanding the matter better, then that would be a clear indication that this, first of all, the application has to show that the trial disclosures are designed, under the statutory language, designed to improve on existing disclosures. So there'd have to be some reason to think that that could happen, but the testing would then show that your trial disclosure was superior in some ways. And yes, as I said, I think our expectation is that if that happens, that is vital information to use in ultimately revising the regulations in that direction, so that everyone who's covered by a particular regime would be giving the improved disclosures instead of the current disclosures.
We'll go to Manning, then Timothy Welsh, and then Eric.
Well, thank you for all of your work, and thank you for the progress on innovation. To go from 1 to 1,600 is pretty great. Just go with, I don't know what the next number is going to be, but it's great work. Specific to the question around regulatory ambiguity, I am a broken record on this particular topic, but drawing a straight line between innovation and 1033, that is the most critical driver of the ability to continue to innovate in fintech. And so rulemaking on 1033, which I know it's on the agenda, is critical to supporting your statutory authority around driving innovation in the space. So thank you.
Yeah, and I would just say in that regard that all of these policies really are in some ways designed, partly designed to get information, and this is certainly true of the trial disclosure and the compliance assistance policy, to get information from the company that's the recipient of the trial disclosure waiver or the approval that could ultimately feed in to a rulemaking. It's a great way for us to get data that could be used in the rulemaking.
Okay, we'll go Tim Welsh.
Thank you very much. I'm really excited about this initiative, and I particularly commend the mindset that you all have talked about, the director talked about earlier. The mindset of agility and adaptability, I think, is fantastic, so thank you for that. In our own work in this front, we've been struck by the fact that consumer expectations of financial services are not set by other financial services companies. They're set by the best experience that a consumer can get anywhere in the world. And so when you can walk outside of this building and push a button and a car pulls up, you don't understand why it takes 45 days to get a mortgage. Or if a company can communicate with you, your package is in the delivery facility or your pizza is on its way, you don't understand why you can't figure out where your loan is, right? And so and by the way, from our perspective at least, consumers don't understand that if they can get those experiences somewhere else, they don't understand why everybody can't do that right now for them. So it has changed the pace at which we've been expected to work. And so that really gets at the core of my question, which is how are you thinking about adapting the way you work, and particularly some of those technology sprints which we learned about yesterday, which was also very exciting. How can you take some of those ideas and other agility ideas to increase the pace at which you work in order to keep up with the customer expectations of what they would expect from financial institutions and financial regulators?
Yeah, I think this is one of the reasons why we'd like to engage very actively with the innovation community. I think if we're not having these conversations with innovators, we don't have sort of the understanding of the state of the art in terms of some of these most agile processes that exist to help inform our own work within the Bureau, as well as what's actually going on in the market. So I think that is one of the real motivations for having the kind of active engagement that we would like to be sort of the central point of contact for.
Great. I think probably there are a number of us who would be happy to participate in that dialogue if that would be helpful.
That would be great.
Great. We'll go over to Eric. We have a hard stop on this segment at 12:15, so get those cards up. Think about it.
Thanks, the Bureau. I'm really excited about this. My questions are specific to the NOW, the TDIP, and the CAS. And they center around confidentiality and proprietary information. So let's say there's an entity that is in the new product development process, and there's regulatory uncertainty because they're dreaming up something that the legislature, never contemplated when they created the laws that drive the regs. What's the lead time for an entity to engage with the CFPB on this? And then is there a timing of issuance control where, let's say that we might want to engage early on in the process, but not have something issued until the product is actually ready to go to market, so to time it with the release of a product? And just can you speak more to, like, if we want to share, like, this is what we're thinking about doing and it's new and different and doesn't really quite fit into one of these boxes, but we don't want the world to know yet, but we'd like to get remove some regulatory uncertainty or mitigate it?
Great questions. I think that those concerns are things we've heard on comments back on the original policies in 2013 and 2016. They're definitely one of the things that we looked at when we were revising the two older policies and proposing the new and finalizing the new CAS policy. I think that the general point is that we're really quite flexible in regard to all of that. All three of the policies really strongly encourage potential applicants to come in and talk to us informally or preliminarily before submitting a formal application. And so we can give you sort of informal feedback about the potential for that idea to ultimately make it through the process. We built into all three policies a much more detailed discussion of expectations about confidentiality, because we know that's very much a concern. So under all three policies, when you submit your application, you can submit a request for confidential treatment of information. I think speaking very generally, most things that are going to, that are proprietary and trade secrets are going to be covered by FOIA Exemption 4, so I think we're pretty confident in suggesting that. Also, I think in terms of the question of the, I'm not sure you were asking this exactly, but even in the case of when we finally issue the no action letter or the approval, we're sensitive to that as well. So that I think at the same time there are certain Administrative Procedure Act limitations on how soon after granting something we have to announce it. So that's kind of built into the policies as well. But the overall picture is we're willing to work with you to whatever extent and to whatever degree of specificity you want to engage us with.
Great. We're going to go right down the line. We'll start with Doe, Valerie, and Teresa.
All right, thank you. A question about the trial disclosure program. If a company submits and gets approval for that, is there an avenue for others to join in using that same disclosure for that trial period? Is that somehow transparent, or is that just a one-off and only the Bureau and that company is aware of it?
Yeah, thank you. That's also a very good question. I think one way to look at this is, and this I think we learned this from talking to people at the SEC how their program works. Under all three policies, the no action letter or the trial disclosure waiver, the approval is limited to the requesting party or parties, strictly speaking. But if you're in the same market and you're doing just put it this way, if you're doing exactly the same thing, I think and you talk to your outside counsel, I think they would tell you, you should be able to rely on that no action letter, because the Bureau is not going to issue a no action letter about X, Y, Z, and then next week bring an enforcement against for this company, and then next week bring an enforcement action against you for doing X, Y, Z. But however, if what you're doing in the case of the trial disclosure is somewhat different, then you might want to apply for your own trial disclosure waiver. And there's a specific provision in all three of the policies where you can apply for your own form of compliance assistance based on one that's already given. And our expectation would be that we would likely be able to grant that in a much more expedited fashion. I would also say that if in that context, that would be something we would be very interested in, because then you could be given the trial disclosure, the same trial disclosure to a different population, and that would just make the data set more robust. So that would be something we'd be very interested in.
Great. Valerie?
Do you want to also just to answer that, talk about the template a little bit, just as another avenue? It's not you found out about a trial disclosure, but the opportunity actually for a group to come in around something similar.
Yeah, thank you. I think in the same general section of the policies that talk about this procedure for applying in the case where your product or service or disclosures are substantially similar to others, that section also sets forth a procedure through which a company, a trade association, or a service provider that's not actually a covered person under the regulations and is actually not providing products and services, consumer financial products and services, can apply for what we call a template. And that will then set a foundation through which companies that actually do provide consumer financial product service can apply for that particular form of compliance assistance. And again, the expectation would be that since the template is already in place, the application would be processed in a more expeditious manner. I think I should also add in this connection that this is not just purely theoretical, because on the magic date of September 10th, when we issued the no action letter to the 1,600 housing counselors, we also issued a no action letter template based on a request from HUD that sets the foundation for no action letter applications from mortgage lenders, the entities that enter into these funding arrangements with the housing counselors. So if you want to see an example of what a no action letter template looks like, go to our website and you can see a concrete example.
Great, Mallory.
Thank you. Just a question or comment basically around the tools that you've laid out to help facilitate innovation and to remove the barriers from entities innovating various products. And I think in that regard, it's very important that we have clear regulatory guidance and coordination among the regulators from state and federal level. And I would love to hear a little more around, and I know it's relatively new in terms of the innovation, but how the safe harbor, if you mentioned safe harbor earlier in your comments, but you talked a little bit about, there may be a safe harbor at the federal level, but maybe not at the state, perhaps. But kind of talk about that coordination a little bit more for us, because again, I think to have the clarity around that is going to really give more comfort to entities around innovating and stepping out and having the balance of the risk and reward around from a regulatory standpoint.
Yeah, I mean, let me just take the first part about it, and then I think Albert could maybe answer the second part. And I think it's an excellent point, and I'm glad you brought it up. Yes, I mean, the trial disclosure policy, if you get a waiver under the trial disclosure policy or an approval under the CAS policy, yes, those are safe harbors for under federal regulations that are within our jurisdiction, but they're not safe harbors from potentially from state law. We don't have authority or interest really in trying to usurp the authority of states to administer their own laws. And so because of that, if there is some potential of overlap there, it's very important to coordinate with the relevant state regulators, and that's where ACFIN comes in.
That's right. So, like Ed said, the safe harbor is only in respect to federal law, and so you just raised this issue of coordination with states and the importance of that coordination to ensure that there is regulatory certainty at both the federal and the state level, and that's precisely the one of the main motivations for ACFIN, to ensure that there are those open lines of communication between the federal and the state level whenever we are considering granting an application around one of these innovation policies, to make sure that there is an understanding, for example, at the state level as to the reasoning for why we are granting one of these no action letters or waivers or compliance assistance sandbox approvals.
Yeah. And then I think I would just add that it's a small sample. We've issued 2 no action letters so far, but in neither case have we seen actions brought against the recipients from state regulators.
Okay, thank you. Teresa?
Okay, and I think I'm kind of maybe tagging on to what Valerie said. We already have compliant disclosures, and so I'm wondering if an financial service provider, credit union, bank, decided to innovate by layering on top of the required disclosures a second version that might be much more easy to understand for a consumer, at least from our perspective. And so let's envision a loan is made, we provide the regulatory required compliant disclosures plus version B that we think is better. Maybe we have a no action letter or a waiver from you. We're still operating in a very litigious state, especially California. And I know there's no legal immunity. Do you envision, given the breadth and depth of your legal knowledge, that attorneys could still come after the financial service provider, or are we pretty safe on that kind of an approach? Any thoughts on that?
Yeah, it's an interesting question. I think there's there's always there's the state, there could be a state law issue, for instance, and there's also always UDAP, right? So you could say, well, I'm giving the required disclosures under TILA. So, and these are just adding, on top of that, I'm not, but then someone could argue, oh, well, by, you're claiming to make this clearer to consumers with your add-on, but it's actually making it less clear or even deceptive, and someone could bring a UDAP deception action. But yeah, I think we've actually seen and talked to several companies that are doing exactly that, and I think there's in the trial, under the trial disclosure policy, there's always a question of like, if you're doing that, then do you really need a trial disclosure waiver? And I think one answer could be well, you might want to apply for a no action letter, right, instead of a trial disclosure waiver in that context, because you might have concerns that what you're doing, although clearly intended to make things more understandable to consumer, there might be some cloud of UDAP hanging over it.
Okay, Director, did you have a comment? You were moving toward the mic.
I was debating whether I should just hold it till wrap up, so I think I will probably do that.
We might be in pre-wrap up right now. But I want to mention the power of that housing counselor initiative. I mean, that's a technical fix that has great implications for positive action and sustaining a critical counseling infrastructure element ahead of changes that might take place in the market, and getting that fixed ahead of time. So that's a small thing, but it's it was a big friction point, but it was done. Also, when that was announced in Atlanta, I think the Bureau opened their Atlanta regional offices. I don't know how many regional offices you have now. 4, okay. You might let us know where, I think one's in Chicago too, but any other cards up? Okay, all right. I'm not even reading, I'm just like.
You have a special place.
A visual impairment for colorblindness.
In regards to the TDP, I'm curious to hear if you've had any interaction or interest from the vendors. I necessarily don't have the resources to create, disclosures, but I would partner with a vendor.
I can't say as if we've had interest from any specific vendor, but one of the reasons why we did develop the notion of a template trial disclosure waiver is because under some of the older policies, we did have vendors and service providers come in who have developed innovative products and services or trial disclosures, and it was really not clear that we could provide them with a no action letter or a trial disclosure waiver because they're not the ones actually offering the consumer financial product or service. And so one of the core purposes of this template process is to be able to provide some kind of assurances to these vendors through a non-binding template process, so that they can continue to have discussions with those entities that do provide consumer financial products and services, are subject to the consumer protection laws where there might be regulatory uncertainty, and to continue developing and allowing some of these trial disclosures to progress and get adopted in the market.
Yeah, and I think I would just add that, and they may have the resources to expend to actually apply for the template, and that smaller institutions may not have, and so they can, again, get that foundation in place and then make it much easier for a smaller institution to apply for its own, trial disclosure waiver, what have you.
Okay, we'll go to Nikitra and then Brian.
Thank you. My question is about the consumer protection features of the policy. How are applicants able to identify potential consumer harms, and what type of guidance are they given in identifying those, especially for applicants that might not be familiar with fair lending requirements and how they should apply?
Sure. So we do place the onus sort of during the application process on the applicant to identify consumer protection risks. I think part of the purpose of those initial preliminary conversations that we have with potential applicants is to walk through and to consider what those consumer protection risks might have. We have staff throughout the Bureau who can engage in those conversations and help potential applicants understand what those risks are. And so I think by the time a formal application comes through the door, we have, I think, an expectation that there will be a real consideration around what those risks might be and how those risks might be managed.
And if I may follow up, are questions asked about any potential algorithmic bias in any of the processes that are being considered?
So if the consumer financial product or service involves algorithms and there's a risk of bias, I'm sure that is a point that we'll be touching on in terms of that application.
Okay, Brian, then Maureen.
Thank you. With respect to the CAS policy, obviously it's specified to apply to just TILA, EFTA, and ECOA. Is there any contemplation that that policy could be expanded beyond just those three acts?
That's a very good question. I think I don't have it at the top of mind at the moment, but I think there are a couple of other of our statutes that have something similar. I think maybe, is it
FDCPA?
FDCPA has something about advisory opinions, a similar kind of safe harbor provision. So yes, I think that's something that the Bureau is considering. I think in general, it would be fair to say we have these three policies. That doesn't mean we're going to just stop there and rest on our laurels. I think we're looking for ways to expand our range of tools, for lack of a better word, so that we can, be more flexible and agile to addressing any kind of uncertainty and ultimately, again, facilitating consumer beneficial innovation.
I think the FDCPA area is probably one that could really apply.
One thing that I will add, though, with respect to that is the debt collection rulemaking that we're undertaking does ask a lot of these questions. There is a disclosure process here with respect to time-barred debt, so we're doing tests of that. And the thought process certainly is that we're modernizing the way third-party debt collection works through that rule. And so there are some things around innovation that we are certainly considering in that process. I haven't been briefed on all the comments we got, of which there were many. I'm sure that they addressed some of these issues too. So there is a facet of that we're thinking about, but you raise a good point with respect to directly these innovation policies.
Thank you.
Okay, Maureen, and we may wrap a little early, but we'll allow the director and staff to make some final comments.
I just had a question about the GFIN and the goals. One of it says permit cross-border trials. I didn't know if you could elaborate on that. I was just trying to think if it was adopting maybe something that's happening, a product or somewhere outside of the U.S., or we talking, maybe it's yes, all of the above, but I didn't know if it was something like remittance transfers came to mind. Is it something that looking for something to be able to, dollars or information is crossing borders, expanding in that terms, or I wasn't sure what was meant by that.
Sure, I'm glad to provide more detail on that. So just to be clear, there are three core work streams that are within GFIN. One of them is related to cross-border testing. Another is related to regulatory and supervisory technology. And the third is around internal coordination among GFIN network members. The Bureau's focus, the focus of our involvement has been on regulatory and supervisory technology. The cross-border testing work stream, which is being facilitated by the UK's Financial Conduct Authority. In fact, GFIN was launched by the UK's Financial Conduct Authority, and ACFIN is modeled after the GFIN initiative. That cross-border testing initiative is focused on streamlining sort of the ability of companies to apply simultaneously to various sandbox programs around the world. And so instead of having to apply in sequence or in sort of a in order to avoid that process of applying to different sandbox programs, this GFIN coordination group allows a simultaneous application process and removal of some of the overlapping requirements that might be involved. But to date, the Bureau has not been focused on that work stream.
And and I think part of the reason why is because we, up until the magic date of September 10th, we didn't have our sandbox policies in place. So would not really have been feasible to do so.
Okay, final call. Director.
Great. Thank you so much again for continued engagement on this topic too. It's a critical one and interesting. I do think that the partnership element of this with fellow regulators is one of the more challenging things. It's something that we talked about extensively As I said, that was in part why it took us a while to work through the launch, because it very much was trying to engage with fellow state regulators in particular and state attorneys general to get their buy-in, to have the conversation around what we're trying to achieve and what the goals are for our partnership, what the opportunities are, and sharing best practices and building that trust and that relationship. You've heard me say it in a number of different contexts. I certainly said it last week before members of Congress in hearings, but I believe it's a responsibility of the government to be providing, a united front, so to speak, a consolidated vantage point on things around interpretation of law, legal requirements, our regulatory work and efforts, and how we communicate that. There may be some differences and distinctions, and certainly when you talk about federal versus state, there are different laws at play that the state regulators are responsible for overseeing, as you well know, very intimately know. But our ability to articulate that, to work together, to communicate clearly about it is important, and that's very much our message around innovation, is that we want to have that open dialogue and conversation and partnership with our fellow regulators. I also wanted to highlight too the improving disclosures part of this conversation. It's frankly where I am most excited. We've talked a lot about our education mission. We want consumers to have the best information possible at the time that they need to make a decision about what is best for them. And so disclosures are a fundamental part of that, and it's certainly a key part of consumer protection law in this country, and certainly a key part of how we go about doing consumer protection. But we also know that we're, particularly in this era, clicking through a lot of things that are not necessarily read, and frankly, maybe are not timely with the kind of information that you need when you're trying to make the decision versus after the decision when you're just trying to get past it and through it. So really the opportunity here with respect to disclosure is a great one. And I very much hope that we get trade associations, service providers coming forward with some really great ideas on that front that a number of entities will be able to participate in, and we'll see some real results from that. So thank you.
Well, thank you for all your comments and participation. We are going to alert our viewing audience that we're going to take a break till 2:15 p.m. Eastern Daylight Time. For our global viewers, our GFN friends and our friends in London at FCA, that's 6:15 Greenwich Mean Time. So enjoy an early dinner. We will have lunch and be back at 2:15 Eastern. Okay, ladies and gentlemen, we are back live streaming. This is the from Washington, D.C., the combined advisory committee roundtable. We're back for our final session today on Thursday, the 24th of October. And this afternoon, our final area of presentation is Consumer Response Complaint Database Enhancements. This has been a very public part of the Bureau's actions and activities, and it's been the subject of dialogue and interest from many parties within Washington and throughout the country. And with us today is Darian Dorsey, Deputy Assistant Director for the Office of Consumer Response in the Division of Consumer Education and Enhancement. And we thank you for being here. And of course, we'll have time for questions, and this will be our final activity for today's public session, and it will close the advisory meetings for this October. Thank you. Daria?
Good afternoon, and thank you all for having me. I'm pleased to be here and to have an opportunity to share with you more about some recent and forthcoming enhancements to the public-facing consumer complaint database. I also recognize that I'm standing between you all in a pretty perfect fall day, so I want to keep my remarks short so there's plenty of time for discussion. First, a little quick overview of the work of the Office of Consumer Response to put the database itself in context. We always say we do three things. It's pretty simple. We answer consumers' questions over the telephone. This year, we've fielded about 13,000 questions per month over the telephone. We also handle consumers' complaints about consumer financial products and services. This year, we've received almost 290,000 complaints, so this calendar year, which works out to be roughly 29,000 complaints per month on average. The vast majority of these complaints are submitted over the website, so around 83% come in through the Bureau's website, which is more relevant as I show you some of the enhancements we've made recently. The rest of the complaints come in through referral from other regulators, and then some small subset of those are submitted over the telephone and through mail and fax and other channels. Most of the complaints we receive are sent to companies in less than 1 day, but we also refer complaints to other regulators. So for example, when we get a complaint about a depository institution with assets less than $10 billion, we're going to refer that to the appropriate federal regulator. Finally, we share data and insights. This is a lot of information. I mean, I've just mentioned 290,000 complaints this year. That's a lot of data and information. So it's really important for us to share this data and glean some insights and share those insights as well. So today, mostly I'm going to focus on the public-facing consumer complaint database, but I do want to highlight a little bit about how complaints inform the work of the Bureau before we talk about the database specifically. So as we noted in our annual report to Congress at the end of last March, the Bureau analyzes consumer complaints and the company's responses to those complaints, as well as the feedback we get from consumers, to understand trends over time, relationships between sets of complaints, and geographic variations in those complaints. Spikes in complaints can trigger near real-time alerts, prompting additional analyses. All of the tools that we have internally support our work as we assess the accuracy, completeness, and timeliness of companies' responses and ensure that the Bureau and other regulators have timely and useful information about consumer complaints. Together, complaints help the Bureau regulate consumer financial products and services under the existing federal consumer financial laws, enforce those laws judiciously, and educate and empower consumers. You'll be able to read more about the full analysis of the complaints we received in 2019 in our forthcoming annual report to Congress, which is due out at the end of March, so look for that. I want to shift now to talk about some of the tools we've built internally. So I've talked a little bit about how we use complaints, but this is a little bit about the suite of tools that we have inside the Bureau to analyze complaints. The first of those tools is something called Explorer, which kind of, as the name sounds, lets users within the Bureau who have authorized access explore complaints. They can add filters, they can search for keywords and concepts to enhance their understanding, to understand what's going on at a pretty near real time. We also have a tool called Geospatial, which enables users around the Bureau, again with approved access, to look at complaints in geographic areas. This is useful, for example, in our Office of Service Member Affairs. They can look at complaints around a military installation if that was of interest to them. Next up, we have a tool called Trends, which is one of the most obviously named of these tools. You can view trends of complaints. So you can look at how complaints are changing over time. You can filter and search through these as well, and look, for example, at a particular product if that's of interest and see how that product is trending. Next up, we have a tool inside the Bureau called Advanced Analytics. This uses spots statistically significant spikes and changes in complaints that can help us kind of pinpoint, dig into something and see if there's an issue or something we want to analyze further. Last, we have a tool called Interactive Reports, and this just enables users within the Bureau to generate a quick summary report of complaints to inform discussion. So it's real, grounded in those data-driven discussions. So as the director noted just last month, we're working to take some of these internal tools and add them to the public-facing consumer complaint database, and that's really what I want to spend some time talking about today. These and some other enhancements are designed to ensure that the consumer complaint database presents complaints in a fair and accurate way. Some of these have happened already. So last month, mid-September, we added a before you start a complaint feature to the submit a complaint landing page. We prompt consumers in this new feature to consider 3 resources before they start a complaint. The first, we link consumers to more information about the complaint process to manage their expectations and also understand what the process is designed to do. The next resource that we highlight for consumers is that companies can usually answer questions specific to their products and services, and especially specific to an individual consumer's situation or experience. As director noted, when she announced these enhancements, we encourage the consumers to contact companies, but it is not a requirement before submitting a complaint. But we do make this prominent in this before you start a complaint feature. Last, we connect consumers directly to hundreds of impartial answers to common questions in the Bureau's Ask CFPB. So right there within the Submit a Complaint page, they can immediately search and connect to those resources. The Bureau cannot be everywhere with everyone at every transaction, as the director has noted, and these enhancements are designed to educate and empower consumers before they start a complaint. Next up, we also made some enhancements to the Submit a Complaint landing page. Just like it's important for consumers to be educated about the process and some resources that can assist them, it's also important that users of the database have important information to understand what the database and how the database works and doesn't work. We highlight 3 things in this new feature called Things You Should Know Before You Use the Database. We first note that complaints are only published after the company responds, confirming a commercial relationship with the consumer, or after 15 days, whichever comes first. Here, you can also link to learn more. For example, if you click that link, you will find out what's not published. So complaints refer to other regulators, such as complaints about those depository institutions with assets less than $10 billion that I mentioned. Those are not published. We make that clear on the database landing page. Next, in this Things to Know box, we remind users that complaints are not necessarily representative of all consumers' experiences with a financial product or service. The database is, as its name suggests, a database of complaints. So it's not going to reflect the full range of positive and negative experiences that consumers have in the marketplace every day. Lastly, in this box, we make sure that users of the database know that we don't verify all the allegations in the complaint narratives. Consumers can consent to publish their narratives, and if they do, we take steps to remove their personal identifiable information, but we do not adopt their particular views, and note that users should consider what conclusions may be fairly drawn from complaints alone. So this is information that we link to from this new Things You Should Know Before You Use the Database, right at the top of the page. So that's some of what's already happened, some of the enhancements that have happened immediately. I'll also talk a little bit about some of the enhancements that we have coming. The Bureau sought stakeholder feedback about the database in 2018. We received nearly 26,000 comments from consumers, government and elected officials, community and consumer groups, financial service companies, academics, researchers, market analysts, specialty population groups, and privacy groups. It may not surprise you to learn that all 26,000 commenters did not agree. There were a few perspectives, and so we weighed that feedback, and with guidance from the director, we've charted a way forward. We will be enhancing the database to provide new tools and graphics to analyze consumer complaints and to put that data in context. So I want to highlight what's coming next before we kind of pivot to questions and discussion. First up, I showed you all the 5 tools that we have internally. Over time, we'll be working to make the first 3 of those tools available in the public-facing consumer complaint database. Right now, users have access to Explorer. This is available on the database, and users can use this to take the list view of complaints and filter and search that list view, searching for keywords, applying date range filters, filtering by products or issues. That resource is available today in the public database. In time, and we're targeting for a spring of 2020, we will be adding a geospatial feature. This is just an illustrative graph. It's important to note you will not be able to zoom down to the complaint level, and there's a lot of privacy considerations, and we're very cognizant of that. So we'll keep the mapping at an appropriate level, but users will be able to view complaints geospatially. So be able to look at a particular state, for example. So if they're just really interested in what's going on in a particular state or in a metropolitan statistical area, we're also aiming to be able to incorporate demographic information from the census to add additional context, so to put those complaints in context. So an area with a large population, you might expect to have a large number of complaints. If you see something different, that might be something to explore further. But users will be able to do just that starting in spring of next year. Next up, we'll be adding the aptly named trends tool. This will enable users in late summer 2020 to view complaints over time. They'll be able to understand how complaints, for example, about a particular product have changed. And I think we've mentioned in the past in other venues, mortgage, for example, is a product where the volume of mortgage complaints has decreased over the entire time that the Bureau's been taking those complaints since December of 2011. But since we've been taking those complaints, the total number has decreased, but the product mixes, or the issue mix, has actually changed as well. What consumers are complaining about has changed. You can figure all that out today in the public database. You can go in and you can export the data and you can put it in Excel and then you can make yourself a graph. And some of us will do that, undoubtedly. You know, insomnia happens. So some of us will do that, right? And that's great. But the idea and what the directors instructed us to do is to make that easier for users. So users can quickly and easily understand these trends without having to, you know, bring Excel into the picture or some other analytical tool. And this will be able to, you know, what I just described, you could do in just a few clicks. Pick a date range and be able to view that information. This, again, is just an illustrative graph that would kind of show what that might look like. So the bottom line is that, you know, collecting, investigating, and responding to consumer complaints is a key function of the Bureau. It's really important. Complaints inform our work in a number of ways. They support our education, regulatory supervision, and enforcement tools. They're a piece of that picture. And increased access to this information and utility of this information, while always kind of putting it in that fair context, we think will yield greater accountability to the Bureau, to the American people, and just enable users to understand a little bit more about what the Bureau's understanding and how it's informing our work. So with that, I will hand it off for any questions and discussion.
Great. Well, thank you very much. And as we get ready for questions, also there are 2 pages, at least it runs over on 2 pages of questions in the binder too, if you need some kind of thought provokers in this late hour. So we do have, I'm going to start with Sammy and come up here. Nikitra after Sammy.
Thank you. We actually find the database like super helpful, even just kind of understanding kind of trends of what's going on. We do find ourselves right now kind of going through more of this kind of scraping type mode where someone's going through all the different pages, trying to kind of pull stuff, discern themes themselves. Is there any reason why you, rather than making a direct investment in building all these visualization tools, not just maybe opening up an API that of course masks all PII, but makes it really easy then for folks to plug into all the different visualization tools that are already available in the market, rather than kind of maybe reinventing that tool? Even from a consumer perspective, a lot of those same tools do have plugins that you could put directly into your website that again wouldn't have you having to make that investment for those visualization tools.
Thank you. Thank you for the question and the feedback. I think that's really helpful and it's timely. One of the things that we will be doing this year, this is quite in the weeds, but since you brought up the automated programming, the API, one of the things that we will be doing is retiring the existing Socrata API, which was kind of a little difficult for folks to use, and updating that later this year, early next year, to provide an API for exactly that purpose. So other users of the data can pull it in and view the information. Part of it is that we have built these tools internally. So we've built them internally. Let's give the public a good chunk of what we built internally, because we've made that investment, and it made sense for us. And it's been done with largely federal staff resources. So this is something we were able to kind of do in-house with the existing skill set. But I think it'll be available for others to of course make their own visualizations, but we're able to make sure that the filters are at least consistent. We're not kind of filtering out certain things. All that's available through this interface. It'll make it, at least there's one picture to start with, and then people can visualize it however they want using the API.
Thank you.
Okay, Nikitra.
Thank you so much for maintaining the database. It's a really powerful tool for consumers and a real great resource for analyzing data. One of the things that I want us to think about is, I know there's a question about what to do with the data and if it should be limited to 3 years. If that is being considered, I think maybe maintaining an archive of the prior data so that it's easily accessible. And then I also want us to think about how the data is used for consumers as a real tool. One of the things that happens when we're invited to speak at conferences and provide issue education, consumers often ask, you know, which financial institution is the best actor? Who should I get a loan from? And I think having the database is a resource in saying to consumers is to say, look up the CFPB's consumer database and see if the financial institution that you're interested in doing business with, if there is anything there that might be alarming to you. So thinking about that as a tool for consumers who are often looking for lists and, you know, the quickest way to find the safest route could be really helpful.
Yep. Thank you. Thank you for that that feedback. One thing to note about the tools that we're talking about, they will be, at least the team is working to, and it assures me that they will be mobile friendly. So it will be something that consumers and others can look at, whether they have a desktop or whether they're using a mobile device. I will note, I mean, part of why we added that things you should know before you use the database, I mean, it is a database of complaints. So it is a part of the whole story, and it is necessarily going to be the sort of negative side of that story. So it is a piece of that puzzle. I think we don't think it is the one-stop shop, and I don't think you were suggesting that either. But that is one thing that is important, that we make it perhaps available, but consider how it should be paired with other information.
Not by any chance am I suggesting that it's a one-stop shop, but I'm thinking about how kind of a review on a product. Like consumers are typically looking at product reviews and make a determination about whether they should use a product or purchase a product. And I think in light of how consumers are engaging in that way, that's another tool for them to do that.
Absolutely. I think that that information is there. That is one of the uses for it. Jumping to the first part of your kind of question, we are planning to keep all the existing data available. We've looked at the feasibility of that. It looks like something we can do, but the analytics tools will start with a focus on a set of years, but will be expandable. You'll be able to look further. But the idea is that for the layperson user who isn't deep in the financial marketplace weeds, to be able to look at recent complaint information, we think has value. We think it's good for consumers and other users of the data to see what's fresh. But all of the information will be available for the economists and the others who have insomnia and want to kind of pull it in, and really dig into it. They'll still have all that information. The data will still be available, but the tools will rest on recent information because we think that's the freshest information, has the most utility to the marketplace.
Okay, thank you, Brian.
I know that the company portal I compliment you on it. It's very user-friendly, it's very great to use, and it's got the handy-dandy little button for duplicate complaints. But are there any filters or guardrails in the system that would prevent a consumer from filing one unmeritorious complaint time and time again?
We do, so you're correct to note that there is, that within the secure company portal that companies use to respond to complaints, there is an administrative response to let us know about a duplicate complaint. We do look for patterns and trends in those duplicates. Obviously, like one duplicate, is not going to necessarily drive us to take a particular action. But where we do see patterns of that behavior, we have someone on our team who engages directly with companies. We also get help tickets. Where we see kind of a pattern of that, if companies can alert us to it, we can take steps to try to mitigate that consumer behavior. For us as the government, the bar to kind of ban someone from something is very high, so we're really judicious in that. But we do understand that sometimes consumers, exhibit that behavior. Persistence, is sometimes rewarded, and sometimes, we need to kind of rechannel that effort and that energy. So we do have other means to do that, but the bar for that is pretty high, as you might imagine.
Thank you.
Thank you.
Okay, Manning?
Thank you. It's very exciting, and I would be one of those nerds who would download it to Excel and play around with it. But
Excellent.
So a couple of questions that are going to seem like non sequiturs. But so the kind of intervention that you introduced, I'm not sure when it went in, but before you start a complaint, I think that's really interesting. Did you see any meaningful impact into volume as a result of that?
So we launched it, today's October 24th. We launched it on September 18th. So it's a tad early to know. But because I'm also a data nerd, I did have our team look, and we have absolutely seen consumers searching for answers to questions already. I think more than 2,000 consumers have navigated to some of those questions. That was of the latest numbers that I had. So we do see consumers kind of using that, but it's really early to tell whether it diverts volume. And the idea too, I don't think that may happen, diverting the volume, but it really is about educating and empowering consumers to kind of avail themselves of resources. Sometimes they still need to submit a complaint. Sometimes that's still the appropriate course of action, but more pausing and saying, do I really just have a question? Should I call the company? And do I understand what this process is really designed for? We think that's just good for educating and empowering consumers, whether it results in a change in the overall complaint volume or not. A better educated and informed consumer makes for a better complaint.
Got it. Thank you. So question number 2 is, this is more of a curiosity. How big is your analytics team or data science team that's kind of helping navigate all of this?
So part of the beauty of building these tools in this way, it's a very small team that's built the tools.
Yeah.
Part of that was we didn't want to be in the Office of Consumer Response. We're really close to the data, but we didn't want to be a bottleneck. So part of building these tools is this enables examiners to be their own analysts, right? To have the tools that they need to if they're on site and exam and they have a question, they're not asking us. So the team is rather small, but they've built tools that are pretty powerful, and they've put them in the hands of authorized users, so everybody can kind of become a little bit of an analyst, can look at trends and kind of check an assumption or check a gut feeling and see if it's actually supported by the data.
Got it. And this was probably be a hard question to answer, but what does good look like here? Obviously, more complaints is probably not better, or may be better because it allows you to address issues like mortgage. But what? At maturity, because I know this is still relatively new, what does good look like?
So I don't think for our office that it really has to do with volume. I think it's for us, good looks like managing an effective complaint process, right? If we're connecting consumers and companies where there's been a breakdown in communication, that's success for us. We want that to happen, and we want those issues to get settled one way or the other. Sometimes it's just with additional information. In terms of, overall, I mean, we want complaints to be useful to us inside the Bureau, to be in proper context inside and outside the Bureau, and to be useful to the marketplace. That's kind of what we're looking at, but there isn't like a number. There isn't an up or a down at least within our office that we're looking at. We just want to make sure the information's useful, and is in a way that has a lot of utility and is fairly presented.
Yeah. Well, and one just recommendation, I think Nikitra kind of touched on this, which is, a bigger institution is going to have more complaints just by the nature of them being a bigger institution.
Yep.
So sometimes the data can be a little bit misleading if you don't understand that context. Mm-hmm. And so have you considered publishing things both in the raw numbers but also in forms of like ratios, whether it be relative to assets or relative to some level of scale?
Yep.
Right.
we have mulled, considered, explored, and looked into this a lot, and we continue to. It's one of the things that we're committed. While we make these enhancements, it is one of the things. It doesn't lend itself to a screenshot or kind of a nice visual, but we are committed to continuing to look for ways to put the information in context. There are plenty of challenges associated with that. We have done a request for information specific to how we might normalize complaint information. What we find is that some of the information is publicly available. A lot of it isn't. You can provide that denominator for the math folks in the room. You can find that denominator for some markets, but not others. And so then, how are you putting that? You're doing it for some and not others. What does that mean? We continue to look at this. We continue to try to look for a way forward in that it may be in the form of a guide. It may be in the form of actually finding some data. It may be recommending data sets, and that's tricky in and of itself, but is absolutely something that we continue to work on. I will say things like trends will be helpful in a way, moving us towards that by being able to look at a particular product over time, right? So you can put that product in context, but it's not perfect, and we know we want to kind of continue to work on this and to try to add context and time that makes sense.
I'm going to take that what does good look like up to a higher level, the agency level on this, because everything Darian said was absolutely correct, and it's from the vantage point of the consumer response operation, which is a very efficient and effective operation, I will say, within the Bureau. But we have to go back to the statute and back to the broader points here. Establishing a consumer complaint system was a function that the Congress gave to the Bureau. And when I was framing what our mission is, you will note that the complaints system is not actually one of the tools that I talk about regularly. And there is a very good reason for that. Some of the things that Darian's talking about and what we've grappled with on this was precisely for that reason, because I really see good for us, and in terms of how the Bureau looks at the complaint system, is not that there's a good in and of itself for it. It's how do we look at those complaints and use that system as a means to figure out where we need to engage in more education, where we have a regulatory uncertainty or a regulatory issue and we need to provide more clarity, where there are institutions that actually need to be examined, and so how we take that and apply it to our supervision work, and certainly fourth, where there needs to be enforcement action. So that is the way I see it. It is an important function, and as I said, a pretty capable one and a fairly innovative one too, in terms of the way the Bureau has approached it. But it is not an end in and of itself. It really is, how do we apply that to the tools that we're using to protect consumers? And a lot of the context, it is challenging. This is the task that we gave to the office to figure out how do we really explain to consumers what it is and what it isn't, because it isn't the end all be all. It is not some individualized picture of some holistic version of what the market looks like or how the market is functioning. And I know that Brian has spent a lot of time on this too, so he probably wants to jump in.
Well, Manny, you really hit the nail on the head with normalization, which is a tough thing to solve for, because we have data, but how can we fairly present that data in a way, one, that's meaningful for consumers? So to your point about consumer shopping, how do you meaningfully compare between two institutions? If you're in Kansas and you're looking at Heartland or you're looking at US Bank, it's not lost on me that one has 3,000 times the assets size of the other, which is nothing to sneeze at. But one institution is simply going to have more complaints. And so what is the meaningful denominator there? Is it asset size, or do you go to product line? Are you talking about number of originations? Are you talking about number of transactions? Are you talking about number of interactions with a consumer, et cetera? So that is difficult, and it's been something that we've struggled with for a long time. For my part, I don't know that there's an easy silver bullet denominator. So it may be that you have to have multiple denominators, and you leave it up to the researcher to use those to help analyze the data in different ways. And there are, to Darian's point, data limitations. There's some data that we simply don't have and won't be able to have, maybe shouldn't have. So there are limitations on the power of that comparative analysis. But my view is, the more transparent we can be and the more options we can give, the better overall picture we can give of the marketplace. And to the extent that consumers do want to visit the Bureau for purposes of comparison shopping, to the extent that researchers want to look at this data to analyze trends, to the extent that institutions believe they have a good story to tell about their success with their customer service and want to tout where they are in the pecking order as it might relate to peer institutions, so much the better. So we are really committed to trying to get there, and we realize it's been a pain point in the past and a limitation on the utility of the system overall, but we're working in earnest to try and improve that presentation.
Thank you. I've got Eric, Teresa, Sammy, and Shane. And Sammy, actually, that's an archival holdover. Yeah, okay. Sammy yields back. Eric.
So, quick question for, have there been institutions that have expressed an interest in trying to show resolution, whether through sort of canned responses or substantive responses, resolution of complaints, so that they can give some more context around, one, their responsiveness, or two, their ability to resolve the complaints, if whether they had merit, didn't have merit, if they did have merit, what they did to resolve them. Has there been any feedback from industry to that end, or deliberation on the part of the Bureau?
Certainly. That's a great question. Absolutely, companies, I mean, we like to see it, and we think it happens anyway. I mean, companies want to take care of their customers by and large, right? So we see that in the responses, and some companies do a really wonderful job of responding to their customers. Others, may use canned responses where those are kind of less than ideal. One of the ways that we look at that is, and kind of evaluate that, is through the feedback that consumers provide at the end of the process, where consumers can provide feedback about that response. And we share that information and have for about 2 years with the companies directly. So companies have a sense of maybe where there might still be an unmet kind of expectation. To the companies themselves, they have the ability when they're responding to categorize their response. That's been available for the duration of the time that we've been handling complaints. That gives us a little bit of a window into whether they kind of close a complaint with an explanation or some type of relief, et cetera. It's a very high level picture of it. We do also have a optional public response. That's been available since around March of 2015. When we started publishing narratives of complaints, we gave companies the ability to provide an optional public response. One of the things that we are looking at kind of concurrent with the other activities that we've talked about today in terms of enhancements is whether companies would be interested in having additional optional public responses. Right now there are 9. There's not a lot of use of them overall, and the one that's typically used is a variation of company has responded to the consumer and the CPB and chooses not to provide or opts not to provide a public response. That's the one that companies use most often, but we are open to and beginning to have discussions with and welcome feedback from companies in particular and others about what that kind of set of options might be and the extent to which companies may use it. We do know when we started publishing narratives and when we first introduced the idea of an optional public response, we heard loud and clear that industry was concerned about having a narrative response and what kind of challenges that might create for them operationally within their complaint shops. So we've always used that structured response, but we're open to expanding those in time if there's interest. But that information is, and that tool is available both in the database and in companies' portals currently.
Okay, Teresa.
Maybe taking it a little bit of a step further, given complaints can be highly subjective, how does the Bureau handle submissions that are more opinion-based by consumers than actually based on UDAP or some kind of disclosure? And I'm literally talking about the kind of complaints that may occasionally surface, for example, about I didn't like that advertising campaign, or I don't like that particular entity supports this in our community because maybe they don't embrace diversity and inclusiveness,
Right.
and they just have opinions.
Sure.
So what does the Bureau do with those? Because I would imagine that you get them as well.
So I think, we've gotten 290,000 complaints this year. I don't think anyone, we certainly are not staffed at a level to kind of go through and read through all of those. Even if the whole agency tried to go through and read through, I mean, I think in August we got 33,000 complaints. Like, we could have all stopped what we were doing and tried to read through those instead of suss that out. We haven't really done that, or kind of, if I've bitten off that particular challenge. What we do is we give companies the ability to let us know if there is kind of an unauthorized third party, if there is suspected fraud or scam, that type of thing. There's a set of tools like that. But we use the definition of a complaint that's pretty similar to that the other federal regulators use, which is a consumer's expression of dissatisfaction with an entity about their personal experience. We understand, and I think this is part of the beauty of the database, and you can understand by reading through them that, and same thing when you see a lot of other kind of public statements about things, people are going to have for different views grounded in different things, and users of the information, including our examiners, including people that are reading the database, can read through that and gauge a little bit about their own view of the merits of a complaint. But we don't sit in a position where we're kind of saying, well, that's this and this is that. We really are looking for patterns, and we try to emphasize this with consumers as well, who may have an expectation of a particular outcome. We're looking big picture. I mean, part of the beauty of having this many complaints, upsides and downsides, is that you can get a better picture, and you can ignore the noise on one side or ignore the noise on the over and focus on the big picture. That's what we try to do. That's what we hope by adding these visualizations we're able to do, by focusing people more on big picture. What does the trends look like? And get folks out of the onesie twosies. We do think that, that is the right way forward in terms of the sharing of the public data, is to give more of those general trends and views and try to add more context.
If I can add on to that, first, big picture, the beauty of having a large number of complaints is in an analytical sense, in
Yes.
terms of granularity of conclusions that might be drawn. So one thing we've done and Darian covered this, is enhancements in the disclosures that we provide around the use of the information itself and the disclaimers. So one is, this is opinion. This is not necessarily fact, because it's not independently verified by an outside third party or adjudicated in any particular way. So it is a user experience. And we thought it important to make that clear at the outset, so that folks who do want to use the information that's in the database understand the limitations on its use and how to properly understand what you're looking at, and where there are analytical limitations, that they're aware of that up front, so that we aren't inadvertently misleading folks into drawing certain conclusions that aren't actually supported by the data there. So transparency up front and enhanced disclaimers to talk about what is this and what is it not, and how can this be fairly used, and where might you run into trouble if you use it in a way that it's not intended to be used for.
Great. We have Shane next with his global empire.
Exactly.
Growing.
The U.S. World Headquarters at Elkhart. I thank you. The point I'd like to make is I didn't know if you knew this, but there are actually two consumer complaint databases. There's the one you all have, and then there's Facebook. And the point I want to make from that, as a financial institution, it's nice that they have a place to go, and we have a place to go, because the Facebook complaint just spirals out of control instantly. And it could be something as immaterial as, we didn't give this customer a doggy snack when they came through the drive-through, but all of a sudden that's Facebook worthy. We're having some database where there's a set of parameters and a guideline that not only they work through, but then we can also respond with, is helpful. And so I'm glad this tool is out there, is what I'm trying to say. It actually brings some conformity to a system, and allows them still an avenue to express their displeasure or whatever, but it's still within a framework that can be addressed, because Facebook just drives me crazy.
I will not comment on Facebook, but I appreciate, I appreciate your perspective, and I'm glad that experience is working for you. I think the complaint form is designed it has some minimum elements. It takes a little bit of time, but not a ton of time. But there is a burden. There is some burden to submitting a complaint, and we try to balance that. But I'm glad the structured information is helpful, and that process is helpful.
Sammy, are you back in the game? Okay, and then
Real
Nikita.
comment this time. So I agree with you that it might not make sense to have a kind of public response or narrative form for any one complaint or even set of complaints. But is there an opportunity to maybe have the entities provide statistical data to the databases themselves, of course in any maybe verified mechanism, which then actually tries to help solve that normalization problem? U.S. Bank might want to provide a set of denominators that feel now appropriately reflect that. But two, it also introduces might help with Nikita's point, self-selection bias. Folks who are going to be less likely to want to contribute that denominator are probably something that both researchers, consumers, everyone will realize, okay, there's probably a reason why they're not providing that, and maybe helps make then that maybe database and the incentives more efficient.
That's an interesting idea. Kind of jot that down. It's kind of the idea of a
voluntary,
voluntary. I wrote that first word, voluntary provision of denominators. But that's an interesting idea. Thank you.
It's known as a VOLDOM, but Nikita.
I want to echo the point about social media. I think the other is Twitter. I'd like to echo the point about social media. I think the other vehicle that consumers may use is Twitter. I think it's great that it creates an opportunity for exchange and conversation, and it really helps direct consumers to know that they should contact the service provider, which is something that is not a natural thought sometimes for consumers. So I think that's a real value.
Great. It's wonderful.
Right, Manning. Before you go, Manning, do you get positive complaints, like people complimentary complaints?
We generally
That's
do not.
another database?
No, we don't get a lot of those.
Like shout-outs?
We do have, every now and then, we do have a feature on our website, and consumers can also do it over the telephone, called Tell Your Story, where we're open to if a consumer has feedback, positive or negative, about just a more general experience. So it's not a complaint. We don't use it in the same way. But we do have an opportunity to review that information, and we do get from time to time positive feedback about any number of things. It's a real representation of a lot of different feedback on a lot of topics. It can be about us or companies or our process or any number of things. But we do get some of that. But the complaint process is kind of what we were statutorily charged to do, and that's the process that we've kind of built.
I agree with Nikita on Twitter. We have staff that manage App Store engagement, manage Facebook engagement, manage Twitter engagement. But the other one, which is a more interesting one, is the Reddit community, and actually getting into Reddit threads and just the self-policing nature of that. They don't actually want the companies in there, and so we do a lot of observation, but not a lot of interaction. But a question for you around the complaint process. Do you have data that on essentially the conversion of the funnel? Like how many people start a complaint that it actually ends up being a complaint?
Mm-hmm.
Do you guys monitor that?
We do. I have not looked at very fresh data, and I would not want to hazard a guess off the top of my head. But yes, we have. And I will say, the complaint form is designed to get a high quality complaint, to walk a consumer through the process. Submitting a complaint is not necessarily a goal. Sometimes you're looking through the complaint and you're like, ooh, I don't know what I want for a fair resolution, or ooh, I actually don't know the name of the company, or ooh, I probably should have some attachments. So we don't view it as a negative that they don't necessarily complete it. I mean, it's a little bit of a kind of guided exercise in sort of walking through that complaint. So we do have some data on it. We keep an eye on it. We want to make sure we don't make a change that pushes it too far one way or the other, but it isn't necessarily a metric of success that a consumer is submitting a complaint.
Yeah, and what I'm really trying to get to is, quality, which is obviously a component of that, and so some friction there, I'm sure, is very useful. But also from a usability standpoint, are you having people with legitimate complaints that drop out of the process because either the technology is not useful enough, or so just understanding like how you guys approach that.
We look at that closely. Yep. initially we took the complaints by product category. So in July of 2011, we did credit cards. December 2011, we started with mortgage, bank accounts and services, I think in March of 12. I could go on and bore you through 11 rollouts. But the idea being that with each one, we learned, right? So we saw how consumers were interacting with the form. We saw where there maybe was not a lot of clarity. So initially we rolled out 11 forms. In April of 2017, we consolidated them all into one experience. We did a lot of user testing for the form itself, but we also looked back at what we learned over those 11 kind of rollouts about trying to balance, right? To make it a form that got companies the information they needed to respond to their customers, but also was balanced and wasn't, kind of so burdensome and so difficult that consumers couldn't complete it. We kind of wanted to strike that balance. We continue to look at it, and we kind of iterate a little bit on that form, but for right now, it's kind of data-driven. If you haven't hopped on to either submit a complaint or explore it, you can kind of see that it's dynamic. So as you answer a question, it's going to ask you a slightly different question. So we think we've struck a decent balance, but we're always kind of open to learning and welcome feedback on the form.
Thank you.
Anyone else? Sammy, third time.
Yeah, just actually a quick point, because I've worked on a few similar ones before. You have to make sure to normalize for severity, because what happens is it's only the kind of after the fact, given that it was a severe complaint, that the consumer went through the effort of getting to the end. When you normalize for that, you actually realize there tends to be a higher drop-off rate for more medium severity things that you would have otherwise wanted to capture. But the consumer midway in was like, oh, whatever, and then you only capture the severe ones, and then you have whole categories that might be missed.
Thank you. That's important consideration.
Patrick.
15 days to respond to a complaint. How many of your complaints are responded to by the bank within 15 days or the financial institution?
Nearly all. In 2019, so thus far in this calendar year, we're seeing that companies are responding to complaints on time 99% of the time. So that's good. We're liking that number. That's a great number. Companies do have the ability, if in the day 15, that they just need more time. I mean, some financial matters are difficult to untangle. A company can respond, and I think the median last year, I think it was around 11 days for a company to respond. That's the median. But they can let us know anytime in that 15 days if they need more time. So if they're untangling a 30-year mortgage, they have up to 60 days to respond. But by either measure, we're finding that companies are overwhelmingly on time with their responses.
And I've never gotten a complaint through the CFPB. Would you come directly to me, or would you go through any one of the regulators in FRB or so forth?
You're saying if we got a complaint about
My bank?
About your bank? Depends on how big your bank is, and forgive me, my
Well,
vision.
we're all under 10 billion here.
Okay.
I'm 3.5 billion.
There you go. So,
Right.
so if we got a complaint about any depository institution under 10 billion, we would, we've worked with the other regulators, we would route that complaint directly to the other regulators. Typically, they have a secure government portal where they can pick up their complaints. So as soon as we indicate this complaint should go to the Fed or the FDIC, they'll be able to, in the government portal, pick up that complaint, all the attachments, and follow their own process. And we let them know that that complaint has been referred to them. And we let the consumer know as well who we've handed the complaint off to.
Thank you.
Maureen.
Thank you. You were asking for feedback regarding the structured public response categories. And I guess my thoughts with that were the categories themselves seemed pretty good and comprehensive, but I think they're very limiting. So I don't know if you would strike a balance where that you could click the main box, but then instead of having additional boxes, but have some sort of free form type, because a couple of them, when I look at them, if the entity just used that prompt, it doesn't tell the whole story. So so a few of them, I think, would be considered that you're passing the buck. So if you said that it was the actions of a vendor or a third party, well, that doesn't reflect well on the entity. But if it was because of something with our third party provider, however, once identified, we did A, B, C, and D, a company might be more inclined to provide more of an explanation, just, oh, it was a third party, or there was another option about that the company who got the complaint disputes the facts presented. So if you click that, that doesn't really, even if it's true, it doesn't really reflect well on that entity. But if they could say, well, that was the reason, and then have some sort of free-form type, perhaps you would have a better response rate.
Great. No, thank you. Thank you very much. I think we're going to be looking at that, and that's helpful feedback to as we think through possible solutions to add a little more granularity there.
Okay, anyone, Tim?
Just
yeah.
on that point, as someone who does receive these, and our process is such that I see all of the ones that come through the CFPB, the detail is actually, it's quite helpful. It doesn't seem to be a barrier to customers, and it actually is helpful to us in terms of making sure we can get the question resolved as quickly as possible. Because to Patrick's point, we don't want this to wait. It's often a situation has erupted at a branch or something like that. Someone complains. We want to get that resolved as quickly as possible. And so the additional information is quite helpful to us, and as far as we can tell, is not an impediment to anybody. And I also very much appreciate the discussion of the context piece of this. Anything that helps provide some context, either in terms of speed of response or size of institution, is quite helpful, because we certainly take these things quite seriously and want to be as responsive as we can.
Great. Thank you.
Okay. Hearing none. Darian, any other Bureau comments or questions? Darian, thank you so much, and congratulations on the enhancements and the announcement of improvements and further utility of this.
Yep, coming soon.
device. Thank you.
Thank you.
Okay. I think maybe we let the director or staff leadership make any closing comments. I'll wrap it up with a little administrative thing. So.
No, I want to thank you all again for your active participation over the last day and a half here, and truly an honor to get to know some of you that you're new to the process, to get the opportunity to interact and hear from you. Truly appreciate your feedback, and it's certainly stuff we will take to heart in all of these processes as we move out, and look forward to continued engagements with you. So thank you.
Thank you. And there were really no rookies here. Everybody jumped in. You're all veterans of the advisory process, and there are just so many people to thank. All the administrative people, the technicians, our photographer, the caterers, the Kims, the three Kims, Renato and George, Manny Magnon, he was back there earlier, Crystal Dooley, Director Kraninger, obviously, Deputy Director Johnson, Andrew Duke, Matt Cameron, all the Bureau staff and leadership, and the great deep staff of caring individuals and professionals that are here, and all the intention behind the advisory process. So thank you, and this is our worldwide sign-off for October. We'll see you in March. You'll be hearing from the chairs about engagement, what you'd like to see improved, what we can do. So we will take complaints and compliments, but also teeing up emerging issues that you witnessed some great ones today, and will help set the agenda in a collaborative process among advisory members and professional staff and Bureau leadership. So thank you for coming, and have a safe trip.